all the participants for this evening seminar. Now I request Deepak Ladda, Chairman of the branch, to give his welcome address.
Thank you, Secretary Ravi Shankar Reddy, for starting the program on the time. Respected speakers of the day, CA Kamal Garji from Delhi and CA Vajay sir from Mumbai. Sir, welcome to Hyderabad virtually, sir. And all my esteemed professional colleagues. Thank you for joining this session. Already we have crossed the numbers in 70 by that 401, and I'm sure by the time the speakers take over, it will be crossing more than 150. Friends, as we all know, the Code of Ethics was revised last year, and there are a lot of changes in the revised Code of Ethics. So we have done a program in the past time also, and as we all know, it's a continuous journey to update our knowledge on the Code of Ethics and also the practical issues and challenges which we all can understand. So for this, we have requested our esteemed speakers, Kamalji and Vajay sir, to enlighten on this important subject. As we all know, in our CPE requirement also, minimum of requirement on Code of Ethics is to be mandatory for the each members also to undergo training on Code of Ethics. So when many members were requesting us to keep the seminar on Code of Ethics, so we have requested. Friends, first 4 to 6 hours, it's a 4-hour session, as you all know. 4 to 6 will be taken by Kamal Garg sir on the important changes in the new Code of Ethics. Later, Vajay sir will tell us the more practical issues and practical which issues in the new and practical scenarios in the new Code of Ethics. So without much waste of time, thank you for the opportunity and welcome all the members once again and happy learning. Thank you.
Thank you, Chairman sir. You have put the context on very right. And now I take the privilege to introduce the senior speaker, Chandrasekhar Narayan Vajay sir. Then I will introduce Kamal Gupta sir. Chandrasekhar Narayan Vajay sir is BCom, FCA, ACS, LLB, practiced as a chartered accountant since 1980 for more than 40 years now. His active participation in the work of many professional bodies of CS. He has delivered lectures and written articles on taxation, banking, and allied subjects, also on Code of Ethics for CS. He has delivered lectures and written articles on Valmiki Ramayana, Mahabharata, Bhagavad Gita, and many other social subjects. So I think they're all linked to our professional ethics now. Anchored musical and other cultural programs. He is actively connected with arts and literature. He has directed plays in Sanskrit language and also worked for promotion of Sanskrit language. He is president of Maharashtra Seva Sangh, Mulund, an 84 years old reputed organization. He is president of Sanskrit Bharati, Konkan region. He is director, ex-chairman of Janakalyan Sahakari Bank Limited. He has held many responsible positions in many organizations. He is also a recipient of Yoga Mitra Award from Yoga Vidya Niketan, Vashi, Navi Mumbai. He is also a recipient of Best Social Worker Award from Senior Citizens Association Mulund. He is the recipient of Jal Dastur Award for Best Feature in BCA Journal. Sir, with this versatile personality we are having today for our session, we are very lucky to have you, sir, here. Now, I take this opportunity to introduce the another speaker, Kamal Garg sir. 1 minute. I'll open. Most of us know his
Raviji, only 2 lines are sufficient. Huh? Let us start.
He is a fellow member of the Chartered Accountant and a lawyer, advocate, and his post-qualification courses include DISA. He is also insolvency professional under IBPI. He is regularly serving our institute in Board of Studies and even FRRB, Study Material Research Group of NIRC, and so many other committees. He is serving for our ICI. He don't need any introduction to us, but he is a regular speaker for us, and he has written so many books. I think more than 2 dozen books he has written on various subjects, mostly on corporate laws. With this brief introduction, I put forward you, Kamal Gupta sir, to take the session. Thank you very much, sir, for coming.
Sir was saying 2 lines are sufficient. I think 2 words are sufficient. Kamal Garg.
Kamal Garg.
That is so big heart of you. So thank you, Hyderabad branch. Thank you, Chairman sir, and thank you, Reddy sir, for giving this honor and introduction. So before I share my screen and discuss the PPT, I have few questions to be asked. The topic is code of ethics, and I must say the topic is not new. The topic is not new, but principles are new in a different manner. So the very first question I should ask each one of the listener is whether this code of ethics revised is in substitution of Chartered Accountants Act. Yes or no?
No.
If the answer is no, which is bound to be no, then my second question is whether this code of ethics revised. It could be a tough question for you. Whether this code of ethics revised is in substitution of some of the auditing standards. I repeat and emphasize some of the auditing standards.
I think in addition to those standard ITs.
Yes. So what we need to understand, this code of ethics is not subsidizing anything. Rather, it is a kind of supplemental code, supplemental literature. So whatever you were complying earlier, in addition to that compliance, you have to now comply some more elements. So earlier you were complying X, now you have to comply X plus Y. So we will discuss that Y factor today. One more question for each one of you is, and I will request, please don't search in Google. In the revised code of ethics, now it had been pronounced in 2019. So a new terminology is being used, which is called as public interest entity. So my question to the house is, what is the meaning of public interest entity? Please don't search in Google and respond as per your own logic or wisdom. What is the meaning of public interest entity? Because why I'm asking this question, for public interest entity, there is a very subtle change. Obviously, I will discuss the change through PPT, but for the time being, as a matter of setting the tone, the question is, what is the meaning of public interest entity? So we'll discuss, no problem. So there is an answer from our beloved chairman, sir, where the stake is public and banks. Okay. So having said that, the question must be whether a private limited company can be a public interest entity. Answer is yes. So we'll discuss some about public interest entities as well, because for public interest entities, certain principles are there regarding audit fees. So as far as chartered accountants being auditors are concerned and some public interest entities are concerned, there are new provisions now regarding audit fees, and how to deal with that aspect we will discuss separately. Other question which is very much important over here is, when we discuss code of ethics, in code of ethics, are we aware about the new structure of code of ethics? What is the new structure of code of ethics? Any idea? What is the new structure of code of ethics? So what I will be doing, I will be traveling in this manner. First, I will be briefing about the new provisions as a matter of indexation. Then I will deal with the new structure. Then I will discuss in detail what are the new provisions as a matter of fact, which are important to be kept in mind. So let me share my screen, and somebody please confirm me once my screen is visible. Just give me a moment. Chairman sir, are you able to see my screen?
Yes, yes, sir. Yes, sir.
So today my duty is confined only to discuss about the code of ethics provisions which are meant for professional accountants in practice. But I must say, most of the provisions which I will be discussing today for practitioners are mutatis mutandis applicable even to the people who are in service. So the things are not that much different for people into service. So more or less the things will be same. Moving ahead, let us discuss the background. What is this code of ethics revised saying? So this revised code of ethics is based upon the 2018 edition of the Code of Ethics issued by International Ethical Standards Board of Accountants. So our Code of Ethics is based upon international literature, and that international literature was issued by IESBA in year 2018. On the basis of that literature, we have revised our Code of Ethics in year 2019, which is applicable from 1st April 2020. Certain provisions of revised Code of Ethics were not made applicable from 1st April 2020, like a relative fee size, like NOCLAR. These provisions are deferred for the time being, but now they are applicable in total. So as on date, each and every part, each and every bit of revised Code of Ethics is applicable. Now, what is the main theme in this Code of Ethics? The main theme in this Code of Ethics is there is an emphasis that if threats cannot be addressed. So when I say the word threat means threat to independence. When the threat to independence cannot be addressed, the professional accountant must decline or end this specific professional activity. So what you need to understand, the revised code of ethics is emphasizing in particular that if your independence is compromised and you cannot mitigate that compromise, then you must decline or resign from the specific engagement. So what are those threats? How these threats can come in between your engagement, we'll discuss in detail gradually. The revised edition of Code of Ethics has been made compatible with Indian conditions so that it does not contradict with Indian domestic law. And further, the provisions of revised Code of Ethics have been aligned with the provisions of Companies Act 2013 as well. You will get to know all these things in detail gradually. So I emphasize once again, the core theme of revised Code of Ethics is independence. Code of Ethics at various stages is emphasizing that if your independence is compromised and you cannot mitigate that compromise, then you must decline, or I should say you must withdraw from the engagement. Having said that, I have a small question. The small question is, if you are depositing income tax on behalf of your client, and then the client is paying you that amount you deposited, whether this will be considered as a threat to independence. I repeat my question. You deposited the income tax for your client, and later on the client reimbursed you that tax, whether it will be deemed that your independence is compromised. Yes or no? Yes, any answer? So whatever your questions are, you can ask the questions when I will be concluding my session, but whatever my questions are, please respond my questions immediately. So my question is, if you're depositing tax for your client and then the client is reimbursing your tax payment, whether it will be taken as threat to an independence? Answer is yes. How? I will show you in a while. So please remember that revised Code of Ethics is making it a limelight that your independence must not be compromised. If at all it is getting compromised, try to mitigate it. And if it is not getting mitigated, then you should resign from the engagement. Having said that, what are the new requirements? So primarily, the new requirements can be categorized into 4 categories. What are these new requirements? Now we do have a separate section for chartered accountants who are into service. So when we were having old Code of Ethics, we were having no separate section for chartered accountants in service. Now in the revised Code of Ethics, we have a revised section which is separately dedicated to chartered accountants in service, considering the fundamental and crucial role played by such accountants in the financial reporting, supply chain, and facilitating effective governance in organizations. So now we have a dedicated section in the Code of Ethics which deals with the principles to be complied with by the chartered accountants in service. Then stronger independence provisions have been introduced concerning the long association of the personnel, including partner rotation with the audit clients. Now please be focused on these words, including partner rotation. I have a small question for the house. The question is, we understand very well under section 139 subsection 2 of chartered accountant, section number 139 subsection 2 of Companies Act 2013, we do have the provisions regarding rotation of auditors. How many of you know that there are some mandatory provisions elsewhere about rotation of audit partners? Any idea? So I got some reply that chat is disabled to answer the speaker questions. Chairman sir, can you please enable the chat so that people can respond the answers?
Yes, sure, sir.
So I got one answer as SQC. Okay, Rajenderji, your answer is correct. Rajenderji, your answer is absolutely correct. So in Standard on Quality Control 1, SQC 1, rotation of audit partners is mandatory and the partners must be rotated after 7 years in case you are a partnership firm carrying out the audit of a listed entity. So if you are the auditor of a listed entity, then being a partnership firm, it is your obligation under SQC1 that you must rotate the audit partners after 7 years. So that is the thing which even the revised Code of Ethics is emphasizing. That is stronger independence provision. There is something very new. Requirement where total gross annual professional fees from audit client and its related entities exceed prescribed percentage of total fees of the firm for 2 consecutive years. So this is something kind of new provision. This was not there in old code of ethics. In the new code of ethics, we have a separate provision regarding the fees exceeding the specified percentage. So what these provisions are, I will show you in detail in a while. And then for the first time, new provisions are introduced regarding NOCLAR. NOCLAR stands for non-compliance of laws and regulations in context of your audit engagement. So when you observe any kind of non-compliance of laws and regulations, then you have to do something which is enshrined in code of ethics as well. So in particular, I must say in particular, these last two bullet points are entirely new. These last two bullet points are entirely new. So what you need to understand, we will discuss in detail gradually. But yes, the theme is same. The theme is same. The theme is independence must not be compromised. If it is compromised, you must make an attempt to mitigate that compromise. If that cannot be mitigated, then what you will do? You will resign from the engagement. Having said that, what is the structure? What is the structure of revised code of ethics? So the revised code of ethics is divided into 4 parts primarily, and then we have one more part as a glossary. So 4 prime parts are there, and then we have a glossary part also. Now part one is applicable to all the members. So if you see here, part 1 is applicable to all the members. So when I say all the members, it means that members in practice as well as members in service. Part 1 is applicable to all the members, whether into practice or into service. And part 1 deals with the principles regarding complying with the code, fundamental principles, and conceptual framework. So you can say part 1 is a kind of introductory part. Then part 2 is applicable to professional accountant service only. So part 2 is applicable to professional accountant service, and it sets out the additional material that applies to professional accountants service when performing professional activities. Part 3 is exclusively applicable to professional accountants in public practice, which sets out additional material that applies to professional accountants in public practice when providing professional services. So if you see, the words are additional material, both ways. So when we say additional material, it means that this revised code of ethics is not overriding or is not substituting whatever was pronounced in past. It is merely a kind of supplemental literature. Then part 4 deals with independent standards. And then lastly, we have glossary. Glossary defines various terms which are used in the revised code of ethics. With this very basic structure, let us start with discussion one by one. I am discussing only the important provisions. Then it will set the tone of entire code of ethics. So to start with, I will start with section number 400. Section number 400 deals with independence for audit and review engagements. I repeat, the heading is independence for audit and review engagements. The principles are contained in part 4, that is section number 400. Now what section 400 says? Section number 400 of revised code of ethics volume 1 deals with applying the conceptual framework to independence for audit and review engagements. Now be high alert, because I'm going to discuss something different which is new to this literature. Just see what the code of ethics says. The code of ethics says in section 400 that it is in the public interest and is required by the code that professional accountants in public practice be independent when performing audit or review engagements in accordance with the requirements of the code, along with any additional requirements. This part applies to both audit and review engagements. The terms audit, audit team, audit engagement, audit client, and audit report apply equally to review team, review engagement, review client, and review engagement report. I will stop here. Now for this second point, I have a question for the house. The question is, see the question very carefully. The question is, let us assume there is a company RST Limited. It is a listed PSU. It is a listed PSU. Now, if you refer SEBI LODR, in SEBI LODR, we have regulation number 33. Regulation number 33 says that the limited review of listed PSU may be carried out either by statutory auditors or by any other CA in practice. Let's assume that ABC and Co is the statutory auditor, but RST Limited obtained limited review report from Mr. X, another CA in practice. Now the question is whether Mr. X also needs to comply with section 400 of revised Code of Ethics. Because he is not the auditor, but the reviewer only. Yes, any answer? Answer is yes. Answer is yes. So if you refer the Code of Ethics, what the Code of Ethics says, this part applies to both audit and review engagements. In my example, what is happening by virtue of SEBI LODR, SEBI LODR stands for Listing Obligations and Disclosure Requirements Regulations. We have regulation number 33. Regulation number 33 has given an option to the listed PSUs that in case you wish to carry out the limited review, that can be carried out either by your statutory auditors or by any other CN practice. Now the question arises whether that CN practice who is not the statutory auditor also needs to comply with section 400 if he is appointed as a limited reviewer. Answer is yes. By virtue of this new provision, casted in section number 400, now even reviewers need to be independent. I repeat, even reviewers need to be independent. Am I clear about this example? Now, the question arises, what is the period during which independence is required? So the revised Code of Ethics says independence as required by this part. This part means this section 400 shall be maintained during both the engagement period, that is, the engagement period starts when the audit team begins to perform the audit, and the engagement period ends when the audit report is issued, and the period covered by the financial statement. So as a logical sense also, so long as you're carrying out the audit for a given period of time, you need to maintain your independence. More importantly, section 400 further states that if an entity becomes an audit client, during or after the period covered by the financial statements on which the firm will express an opinion, the firm shall determine whether any threats to independence are created by financial or business relationships with the audit client during or after the period covered by the financial statements, but before accepting the audit engagement, or previous services provided to the audit client by the firm or a network firm. Let me ask you a question on this very paragraph to make the things clear. So the question is, let us assume the company is RST Private Limited. It is having commercial complexes at various locations, and it provides office space on rent to various parties. Mr. X, CA, is also having his office in one of its commercial complex. During financial year 2021 or 2022 or sorry 2021 2022, the office space was occupied by Mr. X. Casual vacancy was created in the position of auditorship for the company, and hence the company proposed to appoint Mr. X to fill such vacancy. Question is, can Mr. X accept the appointment as an auditor? Yes, any answer? So I believe the question is clear. There is a company, RST Private Limited. It is having various commercial complexes whereby the office space is given rent to various parties. So one of the chartered accountant, Mr. X, is also having office space in the commercial complex owned by RST Private Limited. During the financial year 21-22, the office space was occupied by Mr. X as well. For the financial year 21-22, what happened? The casual vacancy arose in the auditorship of the company. So whosoever was the predecessor, there was a casual vacancy. Might be he died or he resigned, whatever the reason was. To fill the casual vacancy, the board of directors of the company proposed Mr. X to take up the assignment of statutory audit for the financial year 21-22. Now the question arises, there are two situations. One is during the year 21-22, Mr. X, chartered accountant, is having a business relationship with RST Private Limited because he is having the office space on rent. And the second situation is for this year 21-22, now he is proposed to take up the audit assignment. So question arises whether Mr. X can accept the appointment as an auditor. What is your answer? So I have two answers now. No, he cannot accept. Ravi Gargji says no. Krishna Mohanji also says no. But what if I say yes, he can, subject to certain conditions? Are you getting my point? My point is, what if I say yes, he can accept the appointment subject to certain conditions? So those certain conditions are now introduced by Code of Ethics. I repeat, those certain conditions are now introduced by Code of Ethics. Try to recollect my initial words of speech. When I started my speech, I was telling you the main emphasis in revised Code of Ethics is to ensure that independence is not getting compromised. If independence is getting compromised, the very first step we have to take is to mitigate that compromise. If that compromise cannot be mitigated, then either I will resign or I will not accept the appointment. So now the second part, mitigation of compromise, is important. And for this purpose, revised Code of Ethics is very much handy for each one of us. Now just see what revised Code of Ethics says. I have covered the example for first paragraph. Now revised Code of Ethics has introduced something great for us. And something great is this second paragraph. So this second paragraph says that subject to compliance with the requirements of section 144 of Companies Act. We will discuss 144 separately. Subject to compliance with the requirements of section 144 of Companies Act, where applicable, examples of actions that might be safeguards to address such threats include. So when I say safeguards to address such threat, it means nothing but that I can take certain steps to mitigate the compromise in independence. Now, what are those steps? These steps are called as safeguards. These steps may include, number one, using professionals who are not audit team members to perform the service. Now, in my case, what happened? This firm is a proprietorship firm. So I don't have any other professional in my firm who is not in the part of audit team. So I will go to step number 3. I will come to number 2 later on. Number 3, engaging another firm outside of the network to evaluate the results of non-assurance service, or having another firm outside of the network re-perform the non-assurance service to the extent necessary to enable the other firm to take responsibility for service. That means I can say that other firm will carry out the audit. Ultimately, I will not carry out the audit. Now, what is the main point which is good for each one of us? Having an appropriate reviewer review the audit and non-assurance work as appropriate. Having an appropriate reviewer, see this yellow highlighted area, having an appropriate reviewer review the audit and non-assurance work as appropriate. Now, what is the significance of this sentence? This sentence is very much relevant and helpful for each one of us. Let us take a situation. Mr. Ravi is going to be appointed as an auditor of a company which is having the ownership right of the space occupied by Mr. Ravi as a matter of tenant. That means, let us assume in this question, Mr. X is there. So Mr. X can accept the appointment as an auditor. Answer is yes, it could be yes. How? Let us assume Mr. X wish to accept this appointment as an auditor. What he will do? He will approach, let us assume Mr. Ravi or Mr. Deepak, and will request him, please review the audit done by me. Please help in reviewing the audit done by me. Then Mr. Deepak or Mr. Ravi will carry out the review function, and they will be called as appropriate reviewer. And then they will give the report. Yes, Mr. X was independent in carrying out the audit despite he being a tenant of RST Private Limited. That means if the appropriate reviewer reports that, justifies that, despite having office space in RST Private Limited, Mr. X is independent in his audit function, then there is no problem at all. So what happened in the revised code of ethics? A new concept is introduced. The new concept is having an appropriate reviewer. So this appropriate reviewer could be any CA in practice outside your firm, whose independence is not compromised. Are you getting my point? On this issue, if you have any problem or any question, you are most welcome to ask right now. So this yellow highlighted portion is a new concept which is very much helpful to chartered accountants. There can be many other examples also, which I will cover when I will discuss section 144 of Companies Act 2013. So if I repeat my example, if you are having the office space in your client's premises, still you can carry out the statutory audit of your client, provided you ensure that your independence is not compromised. And to ensure that your independence is not compromised, 3 steps are primarily given. But out of these 3 steps, I am touching upon the second step, which is very important, that is having an appropriate reviewer. Now, who is an appropriate reviewer? Appropriate reviewer is a CA in practice. I repeat, appropriate reviewer is a CA in practice who is not a part of your audit function, and who is given the responsibility to objectively evaluate whether you are independent or not. Are you getting my point? I repeat once again, or I can type it on the screen. Who is appropriate reviewer? Just see on the screen, I'm typing. Who is appropriate reviewer? Another CA in practice. Just a moment. Another CA in practice who is not a part of your audit team and who is given the responsibility by you to objectively evaluate that your independence is not impaired. So in my example, if I say, for example, Mr. X in above question, say, requested CA Deepak Ji to provide his report as to whether, in his view, Mr. X was independent or not. Then Code of Ethics requirements are fulfilled. Am I clear now? So basically what is happening, if I say as a layman, no, as a layman, I will say the code of ethics is saying, why don't you take the help of your own brothers and sisters? That is the fellow chartered accountant. So whosoever is a fellow doesn't mean associate chartered accountants or FCA. Fellow means the counterpart chartered accountant. So you can take the help of any other chartered accountant in practice who is not a part of your audit team, so that he can objectively evaluate whether you were independent or not in your audit function. And depending upon his observations, what will happen? A report will come. He will say that yes, he was independent, or he will say that he was not independent. And depending upon that review function, you can carry out the audit or you can accept the appointment. Am I clear? Krishna ji, there is no specific format as on date. There is no specific format to be used by the appropriate reviewer. So appropriate reviewer can use his own normal kind of culture to report this way. So on the letterhead, he can give the report that Mr. X is independent in his view because of these reasons. So whatever appropriate reviewer will give the reporting, that could be his own format. No format is prescribed. But yes, he has to give the justifications. He has to give the justifications that this person is independent. Now, what can be justifications? The justification could be like the rent being paid was in ordinary course of business. The rent was paid at arm's length principles. That means because of you being appointed as auditor, the company RST Private Limited is providing you no additional benefits. So meaning thereby everything is at arm's length. So these factors need to be inculcated in the report by the appropriate reviewer, which will substantiate that Mr. X is independent. I believe the point is clear to each one of you. Any other doubt? You are most welcome to ask. Okay, I'm proceeding further. So I must emphasize in the new code of ethics, this concept of reviewer, that is appropriate reviewer, is introduced. And you will find this concept getting repeated again and again at several places. In a way, I must say, in the revised code of ethics, it is emphasized that the chartered accountants firm who are carrying out the audit function or review function should appoint. I will not say must, but I will say should appoint appropriate reviewer to review about the independence part of that very CA. Now, if I proceed further, it is the right time that we must go to rule number 10.4. So rule number 10.4 of Companies Audit and Auditors Rules 2014 says that for the purpose of clause E of subsection 3 of section 141. So before I proceed further, let me remind you what is section 141 3E. Section number 141 subsection 3 clause E of Companies Act says that a person shall be disqualified from being appointed as an auditor if he is having a business relationship, with the entity. However, the business relationship is not defined by section number 141 3E. And for this purpose, this expression business relationship is defined by rule number 10, sub-rule number 4 of Companies Audit and Auditors Rules. So now just see what is the meaning of business relationship. Rule 2, sub-rule 4 of Companies Audit and Auditors Rules state that the term business relationship, give me a moment, let me give the laser pointer here. The term business relationship shall be construed as any transaction entered into for a commercial purpose. So first point is there must be a commercial purpose for a transaction to be called as a business transaction or business relationship. However, despite transaction being entered into for commercial motives, the following two commercial transactions shall not be deemed to have created any business relationship. I repeat, the following two transactions shall not be deemed to have created any kind of business relationship. Exception number 1. Commercial transactions which are in the nature of professional services permitted to be rendered by an auditor or audit firm under the Act and the Chartered Accountants Act and the rules and regulations made thereunder. For example, if you're rendering statutory audit services to your client, then this is a kind of professional service and it will not be deemed as a commercial transaction impairing your independence, and it will not be considered as business relationship. So if you're rendering any professional service to your client, it will not be considered as a business relationship. Number second exception, commercial transactions which are in the ordinary course of business of the company at arm's length price. So if you are having a commercial transaction with the company and that commercial transaction is at arm's length price in ordinary course of business, then it will not be considered as a business relationship with the client. For example, sale of products or services to the auditor as customer in ordinary course of business by the companies engaged in business of telecommunications, airlines, hospitals, hotels, and such other similar businesses. Having said that, let me ask you one question. The question is, let us assume the company is Savera Hotels Private Limited, Chennai. You are the statutory auditor of this company. You stayed here with family for vacations, and the hotel charged the room rent and other expenses as follows. Case number 1 and then case number 2. Case number 1, rupees 25,000 the same amount is also chargeable from other customers in ordinary course of business. Then case number 2, rupees 15,000. The concession of rupees 10,000 was given because he is the auditor. Now the question is, in which of the case above independence is getting impaired under Rule 10, Sub-Rule 4, read with Section 141, Subsection 3, Clause E, and Code of Ethics. Yes, any answer? In which of the cases, case 1 or case 2, you will say that independence of the auditor is getting compromised? Case 1 or case 2? So I got the answer, it is case number 2. Yes, correct answers are there. This is case number 2. Now I have a different question. Let me assume case number 2 is the correct answer. Now let me proceed further. The question is, if you say independence is getting compromised, but you approached appropriate reviewer and requested him to test whether my independence is compromised or not, then what kind of consideration appropriate reviewer will take into account to give a report that the independence is not getting impaired? Any answer? It will be materiality factor. It will be materiality factor. So whatever concession is given is immaterial, considering the hotel as a whole, considering the audit fees of the auditor. So meaning thereby, you need to justify the concession, and if the concession being given is insignificant in nature, is immaterial in nature, then appropriate reviewer can also say that discount is of such insignificance that the independence is not getting impacted. Are you getting my point? So what was happening earlier days? Normally people were saying that independence is getting impacted, but now because of revised code of ethics, the concept of appropriate reviewer could be helpful. An appropriate reviewer can help you by giving appropriate justifications as to whether independence is getting compromised or not. But mind you, let me give you a precaution. The precaution is simply because appropriate reviewer has given a report that your independence is not getting impacted or is not getting compromised, you are not relieved of your responsibilities of onus of proof in times to come. So in times to come, if somebody challenges, like NAFRA challenges or ICAI challenges that you are not independent, in that very case, the onus of proof that you are independent will be on both appropriate reviewer as well as you yourself as well. Am I clear? So let me proceed further. There's a question from someone whether independent check is post-audit, sir. So, dear participant, this independence check is throughout the audit. This independence check is throughout the audit, because the words used were you have to maintain independence throughout the audit, beginning of audit till the conclusion of audit. And as far as the other question is concerned, how will ICAI know that there is a threat? Somebody may file a complaint against you, or somebody may even check the accounts of the company. Like, for example, the ROC initiated investigation, inspection, inquiry under section 206 to 229 of the Companies Act. And it was found that auditor was given some benefits. In that very case, ROC may even file a complaint against you with ICAI. So depending upon case-to-case basis, the ICAI may get to know. But if somebody can hide it out, then I will have no comments upon that. Okay. So I have covered this thing also. Now let me come to section 410. Section 410 is entirely a new section. Section 410 is entirely a new section in your revised code of ethics. It deals with the fees. So for this aspect of fees, let us discuss in detail. First is fees relative size. Fees relative size. Now what this section 410 says? Section 410 says that when the total fees generated from an audit client, when the total fees generated from an audit client, see the word an, that means one. When the total fees generated from an audit client by the firm expressing the audit opinion, represent a large proportion of the total fees of that firm, the dependence on that client and concern about losing the client creates self-interest or intimidation threat. Quite logical also. If you're getting your major chunk of revenue from one client, then always you will have a fear factor that client may leave me, client may replace me. So that fear factor will create a threat of independence. So institute says, despite having a larger proportion of fees being accruing from one client, there can be certain actions that may ensure that your independence is not getting compromised. And for this purpose, what institute says, actions that might be safeguards to address such a self-interest or intimidation threat include, number one, increasing the client base of the partner or the office to reduce dependence on the client. So institute says, increase the clients. I don't know how to increase the clients, but institute says that increase the clients so that the fees proportion could be diminished. But increasing the client base is not that much easy. For that purpose, we can take help of second step. Now, second step is quite similar to what I discussed earlier. Having an appropriate reviewer who did not take part in the audit engagement review the work performed. So meaning thereby, you can again take the help of appropriate reviewer. You can approach Deepak ji, that Deepak ji, you are a CA in practice. Please help me in ensuring that my independence is not compromised. So Deepak ji will ask you certain questions, and depending upon those questions, he will try to justify whether you are independent or are not dependent, are not independent. So meaning thereby, again, appropriate reviewer concept is a kind of new concept for which the code of ethics is very particular. Ravi ji, wait for some moment. What is large proportion? I will just come on that very part in a while. So what you need to understand, self-interest or intimidation threat created because of the large proportion of fees involved can be compromised. And to have that compromise being mitigated, you have two safeguards to be undertaken. One is either increase the client base or approach the appropriate reviewer to help you out to ensure whether your independence is compromised or not. Now, a question arises, what is the meaning of large proportion? Now be very careful and take a note if it is possible for you, or you may take a screenshot also. You must be aware that revised code of ethics was amended on 29 September 2022. So to understand that amendment, we have to understand the history also. Let us go to the history. So whatever you see on the screen, you can see some sentences are there which are struck off. These struck off sentences are those sentences which are having no relevance with effect from 29 September 2022 because the provisions have been revised. So what was the pre-revision scenario? Prior to 29 September 2022, what was the Code of Ethics saying? Where for 2 consecutive years, the total gross annual professional fees, that is total fees from the audit client and its related entities represent more than 15% of total fees received by the firm, expressing the opinion on the financial statements of the client. So what was the large proportion before the amendment? Large proportion before the amendment was 15%, more than 15%. So for example, you earned rupees 100. You earned rupees 100 as your total fees from various clients. Out of rupees 100, rupees 16 was from ABC Limited. In that very case, it will be deemed that you have earned the major fees from ABC Limited only. And that large proportion is nothing but more than 15%. So wherefore 2 consecutive years, the total gross annual professional fees, total fees from the audit client and its related entities represent more than 15% of the total fees received by the firm, expressing opinion on the financial statements of the client. The firm shall discharge 2 duties. One is disclose the above fact to those charged with governance, like audit committee. So prior to amendment, if you were receiving a large proportion of fees, that is more than 15% of the fees from one client, then what was the requirement? You will intimate the people in those charged with governance, that is audit committee, for instance, that I am receiving a major chunk of fees from you only. And second requirement is, besides intimating the client, but you have to consider the following actions as well, so that your independence can be safeguarded. Now, what were those actions? There were 2 actions. One was pre-issuance review and then was post-issuance review. So prior to the amendment, what was the requirement? If you are having a large proportion of fees, then you will engage engagement quality control reviewer. So you will engage a professional accountant in practice as EQCR, engagement quality control review. So what you will do? Engagement quality control review shall be carried out by a professional accountant prior to the opinion being issued on 3rd year's financial statements. So for 2 consecutive years, fees was on a higher side, that is more than 15%. Then what will happen? Before you will issue audit report for 3rd year, you will call upon a professional accountant in practice to carry out engagement quality control review. And he will report whether you are independent or you are not independent, despite having this large chunk of fees. Now, second step was a post-issuance review. You again will call upon the professional accountant in practice to carry out engagement quality control review after the audit opinion on 3rd year's financial statements has been issued and before the audit opinion being issued on the 4th year's financial statements. So basically what was happening, after 2 years, you will check whether for first 2 years the fees was consecutively more than 15%. If the answer is yes, then you will carry out the review of 3rd year financial statements by an appropriate reviewer. Then again, you will carry out the review of 4th year financial statements by the appropriate reviewer. 3rd year review is called as pre-issuance review and 4th year review is called as post-issuance review. Now what happened after the amendment, which was effectuated with effect from 29 September 22, with effect from 29 September 2022, what happened? This paragraph is deleted and in its place, a new concept is introduced, differentiated disclosure concept. Now, what is this differentiated disclosure concept? I will tell you in a while. Other significant amendment is institute stated no need to disclose this fact to TCWG, but disclose to the institute. So you have to disclose to the Institute of Chartered Accountants of India if you're having a major chunk of fees from a single client. Are you getting my point? What is this differentiated disclosure? I will tell you in a while. Up till here, if you have any question, you're most welcome to ask. So I have one question here. Will these regulations be applicable even for sole proprietors? Answer is yes. Answer is yes. This requirement is applicable even for sole proprietors. And then second question is, in which case EQCR may not be possible. So in this case, you have to engage EQCR, that is any other CA practice. So you can request any of your non-chartered accountants who are into practice to carry out that review. So it will not be impossible altogether. But yes, the provisions are applicable to all the members in practice who are discharging their audit function or review function. Any other question up till this level? Raviji, am I clear now? What is large proportion? Prior to amendment at least. So now, after amendment, a very significant change is that there is no need to disclose to the client. And it is quite a good amendment also, because when you disclose this thing to the client, no, that you are my major client, the client will be having some kind of ego factor that, yes, I am the server for you. So your independence again will be compromised somehow. So better it is that instead of disclosing to the client, disclose to the institute. Now, what is this differentiated disclosure? Let us understand that differentiated disclosure. Then I will take up the questions. I will come to this part later on. Understand this thing. With effect from 29 September 2022, a concept of differentiated disclosure is introduced. Now, when we say differentiated disclosure, Code of Ethics says after amendment that you need to bifurcate the clients, that is the auditee clients, into two categories. Number one, non-public interest entities, and number second is public interest entities. Now, what are public interest entities and non-public interest entities? They are separately defined. We'll see the definition at a later stage. First of all, let us understand what is the differentiated disclosure. So, institute needs to be disclosed about this fact. Disclosure is required where for 2 consecutive years, the gross annual professional fees from an audit client represent more than 40% of total fees of the firm. So if you are the auditor of non-public interest entity, and from that non-public interest entity, you are receiving more than 40% of entire total fees, then you need to intimate ICAI about this kind of engagement. On the other hand, if your audit client is public interest entity, then disclosure is required where for 2 consecutive years, the gross annual professional fees from an audit client represent more than 20% of total fees of the firm. So for public interest entities, the large proportion means more than 20%. And for non-public interest entities, the large proportion means 40%. But you need to understand, exceptions. Exceptions are also there. Number one exception is no such ceiling on total fees of the firm would be applicable. That means that percentage criteria, 40%, 20% criteria. This 40% or 20% criteria, shall not be applicable where such fees does not exceed rupees 2 lakhs. Earlier it was 5 lakhs. Now from 29 September, it is amended. It is now 2 lakhs. So no such ceiling on total fees of the firm would be applicable where such fees does not exceed rupees 2 lakhs in respect of a firm, including fees received by the firm for other services rendered through the medium of different firm or firms in which such member or firm may be partner or proprietor. So if your fees is up to rupees 2 lakhs, and this amount is going into the large proportion by any way, then there is no need to intimate to ICAI. Further, no such ceiling on total fees of a firm would be applicable in case of audit of government companies, public undertakings, nationalized banks, public financial institutions, regulators, or where appointments of auditors are made by the government. So if you're carrying out the audit of government companies, if you're carrying out the audit of banks, in that very case, this ceiling of 40% and 20% will not be applicable. I repeat, this ceiling of 40%, 20% will not be applicable. Am I clear up till here? Let me see some questions, if any. No question in the chat box. Let me see in Q&A if any question is there. No question in Q&A also. Okay, so let me proceed further. Now, what we need to understand is what is the meaning of public interest entities and non-public interest entities. If you remember, when I began my speech, I told you that one of the part in Code of Ethics is a glossary. Now, glossary has defined certain terms. One of the definition is about public interest entity. Now, what is the meaning of public interest entity? Public interest entity means a listed entity or an entity defined by a regulation or legislation as a public interest entity, or for which the audit is required by regulation or legislation to be conducted in compliance with the same independence requirements that apply to the audit of listed entities. Such regulation might be promulgated by any relevant regulator, including an audit regulator. This will include, for example, those listed entities which are listed on Small and Medium Enterprise Exchange, SME Exchange. Further, what they say, for the purpose of this definition, it may be noted that banks and insurance companies are to be considered as public interest entities. Banks and insurance companies are to be considered as public interest entities. Other entities might also be considered by the firms to be public interest entities as set out in paragraph number 400.8. Now, para number 400.8 says that other entities may be considered as public interest entities depending upon factors such as nature of business, size of business, number of employees, etc. The things are not that much simple. If you see this second last bullet point, what they say, for the purpose of this definition, it may be noted that banks and insurance companies are to be considered as public interest entities. Now, banks and insurance companies are considered as public interest entities. That means if they're public interest entities, the large proportion is in this second bracket, that is more than 20%. But the banks and insurance companies, despite being public interest entities, whether if you are the auditor of these banks and insurance companies, whether you are required to intimate ICAI, check from this place. Answer is no. There is no need to intimate ICAI because this ceiling on total fees is not applicable to audit of government companies, public undertakings, nationalized banks, public financial institutions. So insurance companies are public financial institutions, regulators, etc., etc. Now see the words public financial institutions, public financial institutions. I have a small question. The question is on the screen. I'm typing on screen. Just give me a moment. You just have seen the definition of public interest entities. So this is question number 1 for you. Whether NBFC is public interest entity. Yes or no? Whether NBFC is public interest entity. Yes or no? Answer is yes. Answer is yes. Now, the other question is question number 2. Whether such NBFC is exempted from the ceiling limits. Yes, any answer? Whether such NBFC is exempted from ceiling limits. Answer is yes or no? Answer is no. Can you tell me why I'm writing the answer is no? Answer is no because NBFC is a financial institution under Section 2, Clause 39 of the Companies Act, but is not a public financial institution under Section 2, Clause number 72 of the Companies Act. Are you able to understand what I am trying to convey here? What was the exemption? The exemption was only for public financial institutions. The exemption was only for public financial institutions, but NBFC is a financial institution, but not a public financial institution. Public financial institutions are notified under section number 2, clause number 72, while NBFC is not a notified public financial institution. Are you getting my point? So that exemption about ceiling, so that you need to intimate onwards to ICAI, is not applicable to NBFC. Am I clear? Shall I proceed? Am I clear? Yes or no? Okay, I'm proceeding. I'm presuming that the things are clear to you. Now, I have other questions now. The question is, RST Private Limited is a real estate developer. It has received funds from home buyers for supplying them the homes after a predefined period. Whether RST Private Limited is a public interest entity? Yes or no? Whether RST Private Limited is a public interest entity? Yes or no? So I got one answer as no. Any other answer? Any other answer from any of the participants? The answer is yes. The answer is yes. Now, Code of Ethics says other factors. One of the other factor is nature of business. Here, RST Private Limited is collecting funds from general public, and hence it is also a PI, public interest entity. So even the Code of Ethics revised states that if you are collecting the money from the public, the money is being kept in fiduciary capacity unless and until the supply is made to them. And that's the reason these real estate companies also fall into the clutches of being a public interest entity. Am I clear? So just see, the Code of Ethics is getting strict here. Now, the very moment it will become public interest entity, quite obviously, the large proportion here shall mean this 20% criteria. Are you getting my point? This 20% criteria hence is important. Now, please, again, I'm emphasizing, if you're falling into the clutches of relative size of fees, that is large proportion of fees, who need to be intimated? Who needs to be intimated? Client or institute? It is institute, because prior to the amendment, it was client, that is TCWG, those are with governance. Now it is institute. So this completes your discussion on fees relative size factor, that is a large proportion of fees. On this large proportion of fees, if you have any queries, you are most welcome to ask. There is a question from MM Quatraji, whether Section 8 company is a PI. Yes, Section 8 company can be a PI, depending upon the nature of the entity. Trust is a PI. Yes, trust is a PI. But if it is a private trust, then it may not be. So if it is a private trust, it may not be. So again, I will say, depending upon case-to-case basis, you have to make an evaluation whether the entity is a public interest entity or not, because three things are written, three factors are written: size of business, nature of business, number of employees. Like, for example, if I say mutual fund companies, so those companies who are into mutual fund operations, like asset management companies are also PI, public interest entities. Cooperative banks are PI, because the exemption is only for nationalized banks. Just see here, the exemption is only for nationalized banks. So these are again, cooperative banks will fall into the clutches. I get my point. Whether ICAI, say, let us assume you are the auditor of ICAI. You are the auditor of ICAI. So whether ICAI will be considered as public interest entity or not? Whether ICAI will be considered as public interest entity or not? Answer is yes. And the exemption will be available because of this regulator. So if you are the auditor of ICAI, ICSI, SEBI, and these kind of public bodies, in that very case, the exemption will be available. Any other question? Shall I proceed if there is no question? Okay. Let me see in Q&A. So no questions are there. Okay. If you have no question, I have a question. I was thinking that you might be asking this question, but nobody asked. So let me ask you. See, the revenue side of P&L of CAX in practice shows as follows. Fees from audit services, ₹100. Fees from filing bulk returns, that is ITR, of employees of ABC Limited, just give me a moment. Rupees 600. Fees from preparing project report for a startup, rupees 200. Fees from providing FEMA advisory services to an IT company, rupees 200. Total, the total will be rupees 1,000. Question: whether any intimation is required to be given to ICAI for large proportion of fees. Yes, any answer? Any answer? Whether an intimation is required. So I got one answer from Nagendra ji. Answer is no. Okay. Any other person? How many of you people favor the answer is no? So to cross check you, let me put a changed question here. Whether your answer will be same now, whether in this question number second, this is question number second, and this was question number 1. You can have a look out on question number 1 and second once again. I am displaying question number 1 for you. Now see question number second. Now please tell me, out of these two questions, question number 1 and question number second, in which case intimation to ICAI is required, and the reason also. I'm showing question number 1 once again. So in which of the question you have to intimate to ICAI, and the reason. There is an answer from Sai Krishna ji. If bulk return was received from ABC Limited, then my answer is yes. Okay. Let me see some more answers. Both cases, the answer is yes. Okay. Let me go back. See this point once again. If for 2 consecutive years, or let me show this chart itself. Now please read on your own and then tell me whether your answers were right or wrong. I am reading a paragraph and I am emphasizing certain words. Disclosure is required where for 2 consecutive years, the gross annual professional fees from an audit client. So just see these questions, assuming that 2 consecutive years, the fees were same. So I am taking an assumption that for 2 consecutive years, the fees were same. Please check here whether you are receiving large proportion of fees from any audit client. Because disclosure is required only with respect to audit client. Are you getting my point? Disclosure is required only with respect to audit client. In question number 1, where is the audit service involved? This is the audit service involved, no? This is the audit service involved. Now this proportion is only 10%, which is less than 40% because the entity is a non-public interest entity. So here intimation is not required. The bulk fees is 60%. The bulk fees is 60%, but this bulk fees is not the audit fees. It is the ITR filing fees. And hence there is no need for any kind of intimation to ICAI. If I come to question number 2, this is the audit fees. So out of total fees earned by the firm, that is proprietorship firm, 60% audit fees is there. And that's the reason this needs to be intimated to ICAI that I am receiving 60% fees from XYZ Limited towards audit fees. So what you need to remember, intimation is required only for audit fees, not for all the fees. So question number 1 is no, question number 2 is yes. Am I clear? Am I clear with the questions? Yes or no? Ladies and gentlemen, any question over here? Sai Krishna ji, are you now clear with the concept? So bulk return, although the fees was a large proportion, but there is no need to intimate because it is not the audit service. I have to report only about the audit concept, audit fees only. That is, if you see the chart once again, the gross annual professional fees from an audit client, That is what is important. So total fees needs to be considered, but out of that total fees, the proportion is required to be checked only for the audit fees. Let me move forward. I believe the points are clear to each one of you. There is a question from Quatraji. Related entities concept not in amended 1. For example, one of the trustees is a trustee in other trust and you are the auditor of both the trust. Whether these are entities related. Ma'am Quatraji, this is deemed as related by virtue of SA number 550. By virtue of SA number 550, our guidance note on independence of auditor is also there, and that guidance note on independence of auditor covers this kind of case in familiarity threat. So in that very case, what will happen? This will be deemed as parties as related and hence related entities also. Am I clear, Quatraji? So for your question, you have to read along with the Code of Ethics one more literature, that is guidance note on independence of auditor. There is a question from Balusu Nagaji. Shall we need to consider 2 lakh limit? Answer is yes, you need to consider 2 lakh limit. You need to consider 2 lakh limit, but deliberately I'm not putting the figures in lakh just to tell you how to compute the percentages. That is the only intention. So my intention was not to discuss that 2 lakh limit. My intention was to discuss how to compute the percentage for the purpose of intimating ICAI. But yes, 2 lakh limit will be considered. Shall I proceed, sir? Balasu sir, shall I proceed? So intention was only one. Intention was not to consider 2 lakh. Intention was to compute percentages. Now, other thing is fees overdue. For fees overdue, we have section number 410. Again, a new concept. It was not earlier in Code of Ethics, but in new Code of Ethics, this is there. Section number 410 dealing with fees overdue. So what this Code of Ethics says now, a self-interest threat might be created if a significant part of fees is not paid before the audit report for the following year is issued. Unfortunately, this significant part is not defined. But in my view, this significant part can be defined or can be given a color of large proportion as we discussed earlier. Otherwise, significant part is not defined in very explicit sense. So what they say, a self-interest threat might be created if a significant part of fees is not paid before the audit report for the following year is issued. In my personal experience, I heard and I observed also that most of the chartered accountants in practice are having this kind of misconception that if last year audit fees is not paid by the client, then in the current year, I cannot carry out his audit. This is merely a misconception. This is the kind of unawareness we people are carrying. It is not so. Just see what the Code of Ethics says de facto. It says that actions that might be safeguards to address such a self-interest threat include, meaning thereby even if last year fees is not paid to you by the client, still you can carry out the current year audit. How to mitigate that independence? How to mitigate that compromise of independence? For this, we have two steps. Number one, obtaining partial payment of overdue fees. So you can receive some fees out of total outstanding fees. This could be one step. Otherwise, the second step is having an appropriate reviewer who did not take part in the audit engagement review the work performed. So if you are not able to receive the partial fees, then what you will do? You will request a chartered accountant in practice to help you out. He will review your work as an appropriate reviewer, and then you can undertake the audit assignment. Then the institute further says, when a significant part of fees due from an audit client remains unpaid for a long time, the firm, so this is the duty of firm also. Firm here means proprietorship firm as well as partnership firm as well as LLP. The firm shall determine whether the overdue fees might be equivalent to a loan to the client and whether it would be appropriate for the firm to be reappointed or continue the audit engagement. So meaning thereby, institute says, although you will take the help of appropriate reviewer, but you also need to evaluate yourself. You also need to evaluate yourself whether independence is compromised or not compromised. So again, the same thing, the onus of upkeeping your independence is upon you primarily, and then secondary, it will be appropriate reviewer. Now, what is significant part of fees is not defined. For significant part of fees, you may take the same analogy as we discussed earlier about large proportion of fees. So please come out of the misconception. It is purely a misconception. If last year fees is not paid to you by the client, then current year you cannot carry out the audit. It is merely a misconception. Having said that, other thing is management services and the auditors. So you are very much aware of a fact that if you are providing audit services, and in that very sense, you cannot provide other services to the client. If you are providing other services, then disqualification may be attracted and independence also deemed to be compromised. For this purpose, the revised Code of Ethics is having a dedicated section number 600, management service and the auditors. So just see what section 600 says. Section 604 says that providing tax services to an audit client might create a self-review or advocacy threat to extent such service becomes an item in the financial statements. Now see very carefully, to the extent such services becomes an item in the financial statements. All these points are self-explanatory in nature. But in the end, I will ask you a question, which I must request you to be responded back. So first I'm reading all these points, which are plain English. Then we have para number 600.7, which says that a firm or a network firm shall not assume a management responsibility for an audit client. Then it is stated that providing a non-assurance service to an audit client creates self-review and self-interest threats if the firm or network firm assumes a management responsibility when performing the service. Now, what is the meaning of assuming the management responsibility? The Code of Ethics says that assuming a management responsibility also creates a familiarity threat and might create an advocacy threat because the firm or network firm becomes too closely aligned with the views and interests of the management. So when your vision is getting aligned with the management's vision, what was primarily the obligation or responsibility of management is now getting fulfilled by you, it will be deemed that you are stepping into the shoes of management. And when it will be deemed that you're stepping into the shoes of management, it will be deemed that your independence is getting compromised. And for this purpose, one of the examples of activities that would be considered as management responsibility will include authorizing transaction. So if being a chartered accountant and the auditor of a client, you are authorizing any transaction for the client, then it will be deemed that you are assuming the management responsibility. Then they say a concept is there called as administrative services. They say administrative services involve assisting clients with their routine or mechanical tasks within normal course of operations. Such services require little to no professional judgment and are clerical in nature. Para number 2.1 of guidance note on independence of auditors states that self-review threats occur when auditors perform services that are themselves subject matters of audit. So if I'm performing a service for a client and then I'm auditing myself, then in that case, it will be deemed that I am not independent. Primarily, if you see the screen, the words are plain English vocabularies. But interpretation could be crucial for us. If you remember, when I began my speech, I asked you a question, and the question was, if you are depositing tax for your client, whether it will be resulting in any kind of compromise of your independence. Yes, whether your independence is getting impacted in that case. And quite obviously, when you will deposit tax, your client will be reimbursing this tax to you. So as per the deliberation which is written on the screen, what is your viewpoint? Depositing tax for the client is getting your independence compromised, yes or no? Yes, any answer? So when you say answer yes or answer no, I need to have the reasons also. So like Chandni ji is saying no. So Chandni ji, any reason? Rajinder ji says yes. So any reason? So for your yes or no, what is the reason? Rajinder ji says it is assuming management responsibility. Okay. Other way around. So, this question which I asked you is one of the burning question nowadays. For which I must suggest ICAI to give clarifications. But yes, in my personal view, when we deposit tax for the client, and then take a reimbursement at a later stage, it is a kind of financial outsourcing services which are being provided by us to the client. In a way, we are assisting the client with a financial accommodation. So if I deposited tax for the client and later on I am getting the reimbursement, in a way, what is happening? I am providing a fund-based facility to the client. And in that very sense, my independence is getting compromised. I am assuming a management responsibility in an indirect manner. And in my view, hence, this depositing tax for the client is a kind of independence compromise. So we should avoid any such kind of deposit. But other way, the client transferred some amount to you and then you deposited tax of equal amount. In that case, somebody may say that independence is not getting compromised because no fund-based facility is being provided. It is more of a administrative service because it is merely clerical in nature. I am simply passing upon the money received from the client to the government. So depending upon case to case, again, we need to make an assessment. But yes, primarily I am of the firm view. That if you are depositing tax for the client, it may be compromising the independence on your part. I believe the point is clear to each one of you. Up till here, if any question is there, you're most welcome to ask. Okay, if no question is there, then I must proceed further. Now, within the Code of Ethics, some references have come up regarding quality control for audit work. So this is the right time to discuss those references also. For quality control for audit work, we have two literatures. One is SA 220 and second one is SQC1. SA means standard on auditing and SQC means standard on quality control. Now, what these standards say? The standards say that the quality control systems, policies, and procedures are the responsibility of the audit firm. So it is your responsibility that you need to maintain the quality control policies and procedures with the systems for the purpose of discharging your audit function. SQC1 says that the firm has an obligation to establish and maintain a system of quality control to provide it with reasonable assurance that the firm and its personnel comply with the professional standards and regulatory and legal requirements. And number second, the reports issued by the firm or engagement partners are appropriate in these circumstances. Ultimately, what is happening here? The limelight is whatever audit services you are rendering, they must be of superlative quality. What is superlative quality? That your report must comply with the professional standards, technical standards, regulatory requirements, and legal requirements. For example, when you issue the audit report, your audit report should be in compliance with the auditing standards, must be in compliance with the guidance note to the extent applicable, must be in compliance with the Schedule 3 requirements, must be in compliance with accounting standards, etc., etc. Now, SA 220 read with SQC1 says, what are various quality control policies? So when you discharge your audit function, you have to follow these quality control policies from point number A to H. You can read these policies on your own when this clip will be given to you, but I will be highlighting independence point over here because my duty today is to deal with independence point in Code of Ethics. Now, On one hand, Code of Ethics Revised says that your independence shall not be compromised. To that extent, we already discussed. If you deep dive in auditing standards and SQC1, what this standard says, SA 220 read with SQC1 says, this point number C, very critical point, at least annually, the firm should obtain written confirmation of compliance with its policies and procedures on independence from all the firm personnel, required to be independent in terms of requirements of Code of Ethics. Meaning thereby, let us take a situation. You are the auditor of ABC Limited. And in your team, there are 2 article assistants and 1 paid assistant. Those 2 article assistants and 1 paid assistant at least annually need to give you in writing a declaration or a written confirmation that we were independent in our duties when we carried out the audit of ABC Limited. This kind of declaration about independence from your staff is a mandatory requirement by virtue of SQC1 read with SA 220, and this needs to be documented by you in your working paper file. Am I clear? So now onwards, what you need to remember, whatever statutory audits you are carrying out, please ask your staff to give you a written confirmation about the independence. Am I clear? So this is the kind of requirement which most of the people are missing. Now onwards, because you have learned this thing, so please make it a surety that from now onwards, no such kind of miss is there. You must have in your working paper file a declaration, or you can say written confirmation from your staff that they were independent while they assisted you in the audit of a given client. Now, let us consider a situation. Say, let us assume the client is BHEL, Bharat Heavy Electricals Limited, and the audit firm is XYZ Company Chartered Accountants. The engagement partner is Mr. Y. He was given the responsibility to look after the audit of BHEL. During the course of audit, what happened? Mr. Y died, or otherwise we can assume he resigned while the audit was in progress and the responsibility to discharge the audit was given to Mr. X. What should Mr. X do now? What is your take? What is your take? Any answer? So while the audit was going on, if any of the partner resigns or he passes away, then obviously the other partner will look after. So what that other partner will do? What steps he will take? Any answer? Yes, any answer from your side? Please take a note. If you have a notepad, please take a note. In this case, Mr. X is called as taking over partner. I repeat, in this case, Mr. X is called as taking over partner. And for this purpose, we do have SA 220. SA 220 has given the responsibilities for taking over partner. What SA 220 says? The taking over partner should review the following. Just see the word review. The taking over partner should review the following. Number 1, compliance of the regulatory and professional standards by the predecessor partner. Significant matters requiring further consideration. Appropriateness of documentation made by the preceding partner. Need to redefine nature, timing, and extent of audit procedures. And lastly, sufficiency and appropriateness of audit evidence obtained by the preceding partner. All these things which are visible on the screen need to be documented by you in your working paper file. Who will document? The incoming partner in place of the preceding partner who resigned or passed away. Now, I have a question for you. Whether the requirement of Code of Ethics, vis-a-vis the audit client will be applicable even for taking over partner. Whether the requirements of Code of Ethics vis-a-vis the audit client will be applicable even for taking over partner. Yes or no? Yes, any answer? Answer is yes. So taking over partner also need to abide by the Code of Ethics once he goes into the audit consideration business. So taking over partner is also bounded by the revised Code of Ethics. See this one. Another case study. The client, let us assume again, is BHEL. Audit firm is XYZ & Co. Chartered Accountants. Engagement partners, Mr. X and Mr. Y, were given the responsibility to look after the audit of BHEL. So while Mr. X and Mr. Y were carrying out the audit of BHEL, what happened? Mr. Y is of the view that inventory of BHEL should be valued on FIFO basis, whereas Mr. X is of the view that it should be on the weighted average cost basis. Question arises, whose view should be considered while finalizing the audit report of BHEL? So what is happening? In a partnership firm, two partners were given the responsibility to look after one audit. During that audit, these two partners were having a difference of opinion on valuation of inventory. So question arises, whose view should be considered at the time of finalization of audit report? Any answer? No answer? I believe audience is there on the other side because the cameras are off. I can take this presumption.
Absolutely available, sir. They are interacting with chat box in the chat box.
Okay. So whose view should be considered? Now somebody may say signing partner, somebody may say a new partner, and so on. It is not so. This question brings to the limelight the question of engagement quality control reviewer. Even NAFRA has several times reiterated that the quality control reviewer should be appointed by the CA firms. And that's the reason the correct answer is that the view taken by engagement quality control reviewer shall be acceptable. That means this could be Mr. X, Mr. Y, or Mr. Z, or any other person who is designated by the firm as EQCR. That means you have to designate a person as engagement quality control reviewer. Who is that person? Any other CA in practice. This CA in practice could be the partner of the firm or any outside person also. But generally, in practical world, it is seen that partner of the firm is not appointed as engagement quality control reviewer because of the independence parameter. So let us see the definition. Engagement quality control reviewer is a partner of the firm or the person engaged by the firm vested with the responsibility to objectively evaluate significant judgments made by the engagement team and conclusions made by the audit team in formulating the report. So this person engaged by the firm, if you see the first bullet point, is nothing but a CA in practice. And this CA in practice will be acting as your engagement quality control reviewer to carry out the review function. So whatever view he will take, that review will be acceptable to the firm. Now, who is engagement partner? Quite logical. Engagement partner is a partner of CA firm engaged in the performance of audit functions for reporting on behalf of CA firm. Before I show you the next screen, I have a question. Which companies are, I should not say companies, which CA firms are mandatorily required to appoint engagement quality control reviewer? Like I am a quality control reviewer for many firms. Question arises, who these CA firms could be? Who these CA firms could be for whom I can act as engagement quality control reviewer once appointed. For this purpose, we do have, again, SA 220 and SQC 1. Just see what they say. For the audits of financial statements of listed entities. So if you are the auditor of listed entity, it is a mandate on you that you have to appoint engagement quality control reviewer. And I must say, out of my experience, most of these firms have not appointed. And it's a contravention. So for the audits of financial statements of listed entities and those other audit engagements, if any, for which the firm has determined that an engagement quality control review is required. So for listed entities, it is mandatory. For other entities, it is your choice. The engagement partner shall determine that an engagement quality control reviewer has been appointed. So for listed entities, it is mandatory that you must appoint engagement quality control reviewer. Now, what the standard says for the suitably qualified external persons may be contracted where sole practitioners or small firms identify engagements requiring engagement quality control reviews. Alternatively, some small practitioners or small firms may wish to use other firms to facilitate engagement quality control reviews. So I do have some CA firms who don't have the big listed company as clients. For example, there is a CA firm ABC & Company. It is having only one listed entity as a client. So what they are doing, they are appointing some other CAs like me, Mr. Deepak or Mr. Ravi as engagement quality control reviewer. Now, engagement partner is also duty bound to discuss significant matters arising during the audit engagement, including those identified during the engagement quality control review with the engagement quality control reviewer, and more importantly, not date the auditor's report until the completion of engagement quality control review. So the engagement quality control reviewer will give his review report to you, and only after that report you can date your audit report. So that means the date of auditor's report, cannot precede. The date of auditor's report cannot precede the date of reviewer's report. So the limelight area here is for the audits of listed entities, the CA firms are mandatorily required to appoint engagement quality control reviewer. If you have not appointed, then it is a professional misconduct on one hand, and it could be a penalizable action by NAFRA as well. Now, further, rotation of engagement partner. If you remember, I told you and asked you this question in the beginning also. So for the sake of repetition, I am reading it from the screen, although we have already covered this area. SQC1, para 25B and para 27 are relevant. Para 25B of SQC1 says that the firm should establish policies and procedures for all audits of financial statements of listed entities requiring the rotation of engagement partner after a specified period in compliance with the Code of Ethics. So now what is specified period is given by para number 27. Para number 27 says that in context of financial statement audits of listed entities, the engagement partner should be rotated after a predefined period, normally not more than 7 years. So obviously, after 7 years, you have to rotate the audit partners. Now, there are two precautionary notes. The provision of rotation of audit partners shall not be applicable in case of audit of listed entities is being done by sole practitioner proprietor. Quite logical also. If I am a proprietorship firm, then the question of rotating audit partners cannot arise. But then what I have to do? In such a case, in order to ensure that appropriate system of quality control exists in the firm and that appropriate reports are issued in the circumstances by sole practitioners or proprietors, such practice unit shall be compulsorily reviewed by the peer reviewer. So if I am a sole proprietorship firm, in that very case, the question of rotation of engagement partner cannot arise. Then what I will be doing? I will be mandatorily putting my firm under the process of peer review. Am I clear? Up till here, if you have any question, I'm most welcome to ask. There is a question from Swati ji. If EQCR is also a signing partner and if he's having a difference of opinion. So first of all, Swati ji, EQCR cannot be signing partner because SA 220 prohibits it. He is getting engaged in the audit function. No. So the main requirement is that EQCR cannot be a party to the audit engagement. Okay. There is a good point by Ravi Garg. Anyways, for sole practitioner firm, rotation will be for one term of 5 years. Yes, rotation is for 5 years. The question of 7 years will not arise. So in that very case, what will happen? Peer review, otherwise even will be mandatory. So because in case of listed entities, it is a requirement of SEBI also that audit of listed entities can be carried out only by those CA firms who are holding valid peer review certificate. So even if we look at SEBI angle, the peer review will become mandatory. Any other question up till this point? Okay, so let me proceed further if there is no question. Now, let me discuss some recent decisions of Ethical Standard Board. So ESB stands for Ethical Standard Board of ICAI. Let me discuss with you some of the recent decisions. Decision number 1, indebtedness. So the council decided that for the purpose of appointment of an auditor, when is indebted to a concern as dealt with under Chapter 10 of Council General Guidelines 2008, the term auditor shall not include internal auditor, concurrent auditor, or an auditor giving report to management. In other words, the provision relating to criteria / limit of indebtedness shall apply only to statutory audits. So basically, this guideline says that auditor will not include internal auditor, concurrent auditor, etc. But my question to the house is, what is the Chapter 10 saying? What is Chapter 10 of Council General Guidelines saying? Any idea? What is Chapter 10 of Council General Guidelines saying? Any answer? So let me tell you what this guideline says. It says that if you are going to be appointed as a statutory auditor, of an entity. then if you have a liability towards that entity for more than the amount mentioned in the law, in the applicable law for disqualification, then follow that limit. For more than the amount, for more than rupees 10,000, where no amount is mentioned in the applicable law for disqualification, then follow rupees 10,000 limit. Let us take an example. Question number 1. Can you become auditor of ABC Limited? I should say statutory auditor. And let me make a correction here. Instead of writing statutory, I should write here external. So question is, can you become statutory auditor of ABC Limited if you have a liability of rupees 6 lakhs to this company? Then is question number 2. Can you become tax auditor of ABC of XYZ Limited? Or I should say XYZ and Company Partnership Firm. If you have a liability of rupees, say 1 lakh to this assessee. And then question number 3, can you become statutory auditor of RST Society Limited if you have a liability of say rupees 2 lakh to this society? Yes, any answer? Any answer? So what do you have to see? Answer is no, because under section 141 of Companies Act, the applicable limit of loan is up to rupees 5 lakhs only. So answer is no. What about this one? Answer again is no, because under section 288 of Income Tax Act, the applicable limit of loan is up to rupees 0 only. That means even if rupee 1 is there to be paid to the assessee, then you cannot become the tax auditor. Can you become statutory auditor of RST Society Limited? Answer is no, because the law, because the society law is silent, and hence rupees 10,000 limit of council guidelines will be applicable. Are you able to understand this question? Yes. Any question on this front? Are you able to understand this question? Okay, I must ask you a different question also. How many of you are aware that we have the provisions regarding disqualification of tax auditor under Income Tax Act? So when time permits you, please refer section number 288. Explanation below section 288 was amended by Finance Act 2015, and now we have the provisions regarding disqualification of auditor. One of the provisions says, if you are liable to the assessee for any amount, if you are liable to the assessee for any amount, then you cannot undertake the tax audit of such assessee. So in a way, the limit is specified by Income Tax Act, that is ₹0. That is why question number 2 says, because you are liable to the assessee, you cannot become the tax auditor of that assessee. But in case of audit of society under the society law, what is happening? There is no limit prescribed. So because no limit of liability is prescribed by society law, the limit given by Central Council General Guidelines will be applicable, that is ₹10,000. And that is the reason I took up this very issue. The institute says that the auditor word used there will not include internal auditor, concurrent auditor, or an auditor giving report to the management. So primarily we will include external auditors only. Now, second decision of ESB, purchasing shares of the company. There is no prohibition for internal auditor. I emphasize the word internal auditor of the company to acquire or purchase shares of the said company. Then is authorized representative of foreign company. A chartered accountant in practice can act as authorized representative of foreign company, provided he is not the auditor of said company. Non-executive director. In case where a chartered accountant in practice is non-executive director in a company, he or firm in which he is a partner should not accept the appointment as statutory auditor of a company which is a joint venture of original company, as it would impact independence. Quite logical also, and we discussed a bit about this thing in Code of Ethics as well. Last one is very important, holding credit card of a bank. A chartered accountant can hold the credit card of a bank when he is also the auditor of the bank, provided that the outstanding balance on the said card does not exceed ₹1 lakh beyond the prescribed credit period limit on the credit card given to him. So threshold is ₹1 lakh for the credit card. And these are the recent ESB decisions, which in my experience are one of the most overlooked arena. So these 5 decisions are generally overlooked by chartered accountants in practice in real world. I would request each one of you to follow these guidelines. Specifically, most of the chartered accountants are even today unaware that we have the provisions regarding disqualification of tax auditor. And that's why I took up this question number 2. Disqualification of tax auditor when is liable to the assessee. So if you are having any single penny being payable to the assessee, it will be a disqualification. For example, if you have received advance fees for tax audit, if you have received fees in advance for tax audit, then you will become disqualified from being appointed as tax auditor of the assessee, because the research committee of Institute of Chartered Accountants of India has stated that fees being received in advance creates a debt on the CA in practice towards the client. So be very careful when you receive any fees in advance from the client. If advance fees received from the client in case of a statutory audit is up to ₹5 lakh, no problem, because section 141 is giving the threshold of 5 lakhs. But if the advance fees is received for tax audit, then in that very case, even a single rupee of advance fees will make you disqualified. That we need to be very, very careful about. So Deepak ji, this is the deliberation from my side. I will share this PPT to you after the close of my discourse. If any question is there, you are most welcome to ask, else we can close the session.
Sharon
Any
sir,
questions, anyone? Yes, Santosh, I'm online available. Any questions from any participant? Still we have another 5 minutes time. In fact, I know Mr. Kamal is very patient enough. He himself asked in between many questions, and he made sure that every question answered. Any further question from any participant? Yeah. Considering no questions from the first part of the virtual session, Kamal sir, your session is absolutely interesting. In fact, the way you have taken the practical cases with case by case with different combinations. I really impressed.
Thank you, sir.
Thank you
Thank
so
you
much,
very
sir,
much.
for accepting the invitation and for the time which you have given for the Hyderabad branch. We are always grateful and thankful to you. Sir, as a token of appreciation, I request our Santosh to share the virtual memento, sir. As the session is virtual, please accept the certificate which we are going to share across to you, sir, physically.
Thank
you
you,
so
sir.
much.
Thank you very much.
Yeah.
So please send me this soft copy also.
Certainly, sir. Certainly. Santosh will take care. Santosh, you do it immediately if possible.
There is a question
sharing-
from MM Quatra ji in the
Yes.
Q&A box. 20% limit is applicable for one audit client or associated entities. So Quatra ji, this is applicable for one audit client. So we have to see on individual basis, not on collective basis. But yes, let me come to the other side of the table. If one audit client is there and he's paying rupees 10 to you and rupees 10 to your associate firm. In that very case, you have to club both these fees. Am I clear, Quatra sahab? Yeah.
Yeah. Now let us move on to the second technical session on the same topic, but the practical aspects from our senior member, Mr. Chandrasekhar Vaje. Sir, I hope you are online, available. Vaje, sir. Sir, are you available? Santosh, if you don't mind, can you please be in touch with the next speaker and
Yes, sir. Yes, sir.
I'm available. I'm just adjusting my PPT on the screen.
sir, I'm really sorry. Yes, sir.
Can you get it on the screen, please? The
Sir.
PPT which I have sent. Hello.
Yes, sir. Yes, sir. Chandrasekhar, sir.
Hello, Mr. Ladda.
Sharan Kumar, sir.
Sir, you are a co-host now and you can share your screen, sir.
Can you just
In that down green color share screen is there, sir.
hello? Is the PPT which I have sent? Can you get it on the screen, please?
Sir, can you share it if possible so that you can just go line by line? Is it possible at your end? If not, then I can ask our team to share. Santosh, is the presentation available with you? Sir, you can find a button. Yeah, I think you started sharing the screen. Maybe you can open your presentation, sir. Yeah, Chandrasekhar, sir, your screen is absolutely visible for everyone.
Sir, and upside you have a slide, sir.
Actually, I'm on my tab. I just see.
Yes, sir. It's up. visibility, sir.
It is visible.
Yes, sir. Yes, sir.
My PPT is visible now. But
Yes, sir.
not
You are in
able.
PPT is visible, sir.
Okay, but no, I am myself not able to see it. I just
Sir, you are not visible, sir. PPT is visible.
yeah. Okay, okay. I just see.
Sir, in upside slide. Yes, sir.
Ah,
Okay. It's coming full, sir.
it's coming full, but I am not visible and I am not able to see it myself. Can you keep on moving it? Otherwise, I can start.
Sir, actually,
Because
it's your side only, sir. PPT is not with us. Now.
yeah. Other thing you can say, you can make it as a co-host or something.
Yeah, Santosh, 1 minute. Sir Chandrasekhar, sir, maybe you can share the PPT with us. Probably we can share to the team. Yeah.
But I already sent it to you, no? So somehow I'm not getting it on my
Have you
screen.
got the PPT, Santosh? Please check with Uma, madam.
It's there, sir. I'm sharing, sir.
Yeah, please. Yeah, you can unshare. You can stop sharing Chandrasekhar, sir, and you can start sharing.
The inconvenience is there. Can you make
Santosh, are
it
you sharing?
co-host?
Sharing, sir. Sharing, sir. Sir
Okay, no
have two
problem.
PPTs, sir.
No problem.
Yeah, make it the one first with code of ethics.
Yes, sir. Yes, sir.
The other one is with reference to the working paper management. I'll go on telling you next slide वगैरह so that you can operate it from your side.
Sir, this one only, na, sir.
Which one? I'm not able to see it, unfortunately. I just see. Start PPT. Later on you can share with the members.
Sir, you can stop sharing, na, Chandrasekhar, sir. This one only, sir.
Yeah. This is the yeah. Now take to the next slide, please. Hello. Yeah. Right. Not the previous one.
Okay. Okay, sir.
Yeah, Santosh, I request you be online for next 1.5 hours.
Yes, sir.
Yeah, please.
Yeah.
Chandrasekhar, sir, you can go ahead, sir.
Yeah. Thank you very much. Well, namaskar and good evening to all of you. Friends, I must thank the Hyderabad branch for not only for inviting me to speak, but also enabling me to a participant in Mr. Kamal's speech was extremely enlightening. So I was enriched. Now, this PPT of mine, of course, it will be shared with you. But what my focus is not to give any theoretical things, but to share the practical experiences which I have so far acquired by handling more than 300 of the disciplinary cases. So, at the outset, let me thank Mr. Deepak Latta, the chairman of Hyderabad branch, then also my co-speaker, Mr. Kamal Garg, for giving me so much of insight into this topic of the code of ethics, and Mr. Ravi Shankar Reddy for introducing me in a very kind manner. Now, this show of our institute, as you are aware, is Ya Eshu Sukteshu Jagarti. Now, Ya Eshu Sukteshu Jagarti means he who is awake when the entire world around is asleep. In fact, Kamalji pointed out to us that how we were unaware of so many new developments in the code of ethics, which are very much practical and relevant for our day-to-day practice. So there is a need to be awakened. All the updates which we have. Go to the next slide. By Mahasi Aravind from Katholia, and where the chartered accountant is compared with the Brahman or the Atman, which is the ultimate truth. Friends, we are very much concerned with it because we report that way. We say that it is true and fair. Now, the need of code of ethics and all, I will not be giving you a theoretical discourse, theoretical sermon or pravachan, but the need is to change our perception about the code of ethics. Many chartered accountants feel it is a burden on us, but actually it is not a burden, friends. Because the society expects that the code of ethics should be very strictly enforced. The people at large have now understood the deepest value which we have. In fact, the number of cases will be amazed that
सर मैं इधर पीपीटी शेयर कर रहा हूँ सर.
a new disciplinary
हाँ सर
complaint.
बोलिए.
Now,
कौन सा सर?
hello.
सर मैं इधर पीपीटी शेयर कर रहा हूँ सर. मैं बाहर नहीं कराया सर. इधर सार का थोड़ा प्रॉब्लम आ रहा है. मैं पीपीटी शेयर कर रहा हूँ, सिस्टम के ऊपर हूँ. नहीं भी कल का नहीं भी जाए सर. अप्रूव नहीं हुआ वो. बिजारो अप्रूव नहीं हुआ. मेल गया एसएमएस नहीं. बिजारो. एक मिनट सर, मैं बाद में बात करता हूँ. थोड़ा पीपीटी शेयर करो सर का. माझे ప్రాబ్లం ఉంది. ఆయన సైడే ప్రాబ్లం ఉంది. నెట్ ప్రాబ్లం ఉంది.
Shall I proceed? Shall I proceed?
Hello. Hello.
Hello.
Sir, can I share next slide, sir?
Yes. After preliminary slides, no, then there is not much need of showing the slides, because then I will be dealing with the practical. Now, what is the present image of the friends in the society? We are not very much assertive. We are very much accommodating. That means what clients say, we accommodate him, we are compromising on our ethics. That is actually inviting trouble for all of us. In fact, we lack courage, and therefore people are taking us for granted. And the profession has become so vulnerable that you do anything and there is some element of misconduct or the other that the clients or the other people are. The present image is that diminishing because of compromises in their audit function. The reality is that since we want to help the clients, it is our enthusiasm. In that process, we basically know our own duties that we need to be very much aware of. The vulnerability is so much that many times people say that whenever there is a complaint, that they say last 30 years I had an unblemished career. But then the answer from the disciplinary committee is that yes, against you so far. But that does not mean we should not remain in the bliss of ignorance that we are not committing any misconduct. So I'll be pointing out to you various situations where we are compromising on ethics. Like Kamalji also pointed out that while accepting the audit about the fees and other things, like the simple thing of payment of advance tax on behalf of the client and getting it reimbursed. Now that also is technically a compromise on the ethics, although perhaps it is too theoretical or perhaps too hyper-technical, but yes, it is. Now, the first and foremost lesson, and let that first be down there. My first and foremost lesson, friends, over the years of this handling the disciplinary cases, which I have a message to give to you, is that don't do anything in good faith. If you do anything in good faith in the profession and sign anything, then you are sure to invite trouble for yourself. And I give you one instance. Now, all my presentation will be with reference to the actual live cases which I have handled, and therefore it will be more interesting and lively, that I can assure you. Now, the first case which I would like to share with you, these are all stories, but which are not imaginary stories, but from the practical facts. Husband and wife both were chartered accountants. They were practicing independently as proprietary units, means they were not in partnership. Wife did the audit of a cooperative society for 3 years. Thereafter, the husband did the audit. And in the 8th year, there was a divorce petition between the two. And the wife filed a complaint to the institute saying that the husband took the audit without communicating with the previous auditor, that is to herself. Now, to that extent, the threat has increased. That means you cannot trust anyone. You cannot trust your article, you cannot trust your staff, no client, the regulator, customer. You cannot trust even your brother, sister, and not even your spouse, as far as the code of ethics are concerned. You have to be absolutely uncompromising. There's another case. Another case is that there was a chartered accountant who was sitting in the office and he was handling the tax audit of a proprietary concern. Once that proprietor's daughter, married daughter, comes to his office and says that she wanted him to attest the ITRs of her husband and her mother-in-law. This chartered accountant had not filed their returns from his office, so she had brought the hard copies of ITRs, which he verified from the computer, and he confirmed that yes, they are right. And then accordingly, he gave a proper certificate. In fact, you may be aware that there is a guideline of the institute as to how to attest the ITRs. In the attest function, you have to be very careful. You don't have to say that I am certifying the income or anything, but you have to say that this is as per the means. You have to give a disclaimer that this is as submitted by them to the income tax authorities, and there are some guidelines of the institute. Accordingly, he gave a certificate which was very properly worded. There was no issue. But immediately within 1 month's time, he received a complaint from that lady's husband saying as to how he parted with his attested ITRs without his written permission. That means he had a grievance with his wife. The wife had filed a case of domestic violence against him. And therefore, she wanted the attested ITRs in connection with the court proceedings. And therefore, the person, her husband, objected to the chartered accountant issuing the certificate. To that extent, now the people are going. That means now no relationships are permanent. And therefore, howsoever close a person may be to you, but whenever it comes to the work and whenever it comes to your certifying something, please remember that you cannot have totally in blind faith doing anything. And therefore, the first and foremost thing that you have to remember is that two important maxims are there. Work should not only be done, but it should be seen that it is done. Even in case of independence, they say that you should not only be independent, but you should appear also to be independent. So here also, and that is why working papers is of utmost importance. Working paper is of utmost importance even in respect of good faith. Whatever a person may be telling you orally, but if you just blindly trust him and do something, then you are sure to invite the trouble. Therefore, see, 95% of the cases arise due to some dispute among the parties, some other parties, and they want to make chartered accountants as scapegoat. In fact, friends, on this working paper, I can share with you the recent experience. But the next maxim is that faintest of ink is stronger than the strongest of memories. Whatever great memory you may be having, but now many people say that I have phoned this particular client for the details. I have sent messages, but he is not responding. The unfortunate fact is that the chartered accountants never try to write and send a written communication or a written message. Now you have so much of technology at your disposal that you can always send a message, you can always send a WhatsApp message, email, everything. But our chartered accountants somehow are shy of sending written messages or written communication. When you send written communication, the client is put on guard, and therefore then he is bound to respond. And even if he doesn't respond, at least you are safe. So take the next slide. Now, here also this calls for proactiveness. Proactiveness means why we are shy of communicating with the client is because we are ourselves very late. In fact, the client, if we tell them that if you do not furnish the data before this particular date, I won't be able to complete your work. This kind of courage we are lacking. We always have a feeling of insecurity that if you are very curt with the client will go away. And that feeling of insecurity, that means that fear is what is causing great trouble to our entire profession. If all of us are united, because people are saying that if one chartered accountant denies to do certain audit, then there are 100 others to take it up. Sometimes I feel that even the auto rickshaw walas and sabji walas are more organized and united than us. Because here, you cannot afford to say no, because we are not being taught to say no. So once you develop an ability to say no to a client where you are not accepting certain things, where you are not comfortable doing certain things, then the client will stop taking you for granted. But then the whole profession should act together. In fact, the burden is felt because we feel that we are alone, we are isolated. Once you say no, the client will go away and will approach the other chartered accountant and who will be willing to help him. That is why the institute in the code of ethics, it has provided so many safeguards so that clients do not take undue advantage of our lack of unity. But unfortunately, we feel that this is burden. This is not a burden, but code of ethics is a shield to protect us. It is a shield to protect us. If we follow the code of ethics properly, then it is very unlikely that people will take undue advantage of ours. So please, that is why you have to start in time. If you are proactive, then the clients will have no cause to grumble or to cry that you have not told us earlier. What unfortunately we do is the client always gives the data very late, and then we also rush. We don't have staff, we don't have time, and in that process we feel shy of raising queries. If we raise queries, the client says that you should have asked me much earlier. That is why you have to sit on his head and get the data. Now we will be closing the financial year within the 2-3 months time. But in the next year, if you are very sure and you start proactively, take simple things like third-party evidence. Now, third-party evidence can be gathered if you are proactive, but if you are at the fag end of your audit signing, then at that stage to start the process of third-party evidence is very difficult, sometimes impossible. Therefore, friends, the proactiveness is extremely important and you have to be very curt. Now, I'll share with you another story on this next point with the obsession with tax. No, not on the next slide, the next point. Friends, actually, what has happened is, see, there was a very senior firm of chartered accountants, more than 75 years of existence, and all systems were in place. And in that, all systems were in place, so they were doing the things very methodically. There was a client whose audit they were handling for more than 25 years. It was a private limited company with only 2 shareholders, both were brothers of each other. The elder brother was holding 60%, the younger brother was holding 40%. Now, when there was just 4 or 5 days left for the submission of the income tax return, this younger brother, younger director approaches the chartered accountant or the auditor, says that, as usual, I'll bring my brother's signature on this. You also put your signature, and you submit the return. The chartered accountant agreed because that was going on for many years. So he gave in good faith all the balance sheet and all. He put his signature. He gave it to him, handed over it to him. The younger brother went there. He brought the signature of the elder brother, but he never put his own signature. That means he had that scheming mind. And in that scheming mind, actually what happened in the process, that he filed a complaint against him, although the return was filed. See how people behave. The younger brother, because he also had some friction with the elder brother. So he filed a complaint on 2 counts. One is that he, means the chartered accountant, put his signature, only one of the directors had signed and both the directors had not signed. So the company law requires that 2 directors should sign. So this is the first violation of the Companies Act, and therefore the chartered accountant has committed a misconduct. Now at this juncture, I must elaborate on this because there is a misconception amongst many people, many of the chartered accountants, that once 2 directors have signed, then that is the end of the story and then they can always sign it and submit. This is not true, friends. The real law, the provision of law is that the account should first be approved in the board meeting. The board should first approve the accounts and thereafter they authorize 2 of them to sign on behalf of the board, 2 or 3 of them as the case may be. That means what is of primary importance is the approval in the board. Now, since it is approval in the board, the unfortunate part is that we just put our signature in good faith and that is causing great trouble. So remember, friends, we do so many things for our clients. We only sometimes help them in finalizing the accounts. We only help them in preparing director's report. We only help them in preparing even the management representation letter. Everything we prepare for them, even the notes on account. But one simple letter if we take, and that can be a standardized letter that from every company, you take a simple declaration that these accounts were approved in the board meeting held on such and such day. Very simple task. Unfortunately, what is happening now, I have seen that only one person from any group of businessmen, like be it a firm, be it a trust or society or a company, only one person interacts with us usually. And only one person interacts. Thereafter, there are bound to be disputes. Any business relationship or any commercial relationship where their money matters, there is bound to be some dispute among the concerned people. And once that dispute starts, all the others simply disown everything. They disclaim that these balance sheets were, they say that balance sheet was never shown to us. There was no meeting held. In fact, only one of us was interacting with the this particular chartered accountant, and he was in hand in gloves with him. These are very common complaints, friends. Most of the complaints are on these lines, that chartered accountant had a collusion with the partner or the director on behalf of the firm or on behalf of the client who was interacting with the chartered accountant. So remember that what is of utmost importance before signing is that it should be approved in the board meeting. And therefore, the practical advice or practical tip that I would give you at this juncture is that wherever possible, please have at least one hard copy, a master copy of the balance sheet or all the financial statements, which are signed by all the partners of that client or all the directors of the client or all the managing committee members or all the trustees as the case may be. So that at least the first line of defense is there with you. They cannot afford to say that we were unaware of this balance sheet. That also brings me to another very serious lacuna in the average chartered accountant's working. Friends, now I have before my eyes an audience of an average chartered accountant. I am not speaking in the context of large companies, big firms, where there are listed companies audit, where there are highly qualified staff and there is a hierarchy of the qualified people in the firm. I am talking to a typically SME firm. Now, in an SME firm, friends, All these aspects are very important. So another aspect which just now I would like to deal is that once these working papers I have already mentioned to you, but the paperwork, the working paper management is a very separate specialized task which is to be given utmost importance, because any disciplinary case, the first thing they ask is, where are your working papers? So if there are working papers, then you have to so the working papers should be in such a way that any time, and at this time juncture people ask me as to how many years we have to preserve the working papers. So there also you have to be very careful that I'll deal with the time barring aspect of this. But another important ground of the complaint which he did, was there was a car which was registered in the name of only one of the directors, that means that elder brother, and it was not registered in the name of the company. Now, I am leaving everything to the introspection of all the listeners or the audience, that how many of us try to even verify whether the asset is really standing in the name of the company. In fact, many people try to argue that even if it is not registered in the name of the company, but even if it is registered in the name of an individual as a director or a partner, still the company gets the depreciation. That means what? This is the point which I am trying to make, that we are very much obsessed with the tax considerations. We are doing the sole exercise for the only objective of submitting it to the income tax return. Income tax is our sole deciding factor, and that tax obsession is there. And therefore, when in the audit considerations, of course, there should be an independent thinking, because we are certifying the true and fair view of the entity. And when you are saying in the balance sheet assets of the entity, that means we should verify at least whether that asset is registered in the name of the company. There are exceptions to that, but the other aspect of this is that when you are certifying the assets of the company, the most important part is that, unfortunately, I have come across people, chartered accountants, certifying the balance sheets purely based on the financial accounts. They don't go beyond what is appearing in the ledger. That means they don't even try to see the agreement. They don't try to even think of any contingent liabilities. They don't see whether the capitalization has been properly done. So many lacunae are there because we believe only on the financial accounts. One has to have a perception beyond the financial accounts, like stocks, the quantitative statement, quantitative details, the asset verification. All these, unfortunately, we are lacking because we are not proactive. So this is the theme, that if you are proactive and if you chalk out your audit program properly, probably you will do the task much more effectively. The two cases which I am sharing with you is, and now you will wonder as to why that director acted so vindictively, because otherwise they had a very cordial relationship for last 25 years. But the director filed a complaint for the sole reason, which is very funny, that he had approached the CA firm with a request to accommodate his daughter as an article, as a dummy article, which the firm had refused. So as a vengeance of that, he filed this complaint. So now you can imagine as to how careful we should be. We cannot antagonize anything. And once you antagonize anything, that means you become vulnerable. So, and then the lack of communication skills, because we are, as I told you, that we are unable to say no, because we have not been taught to say no. There are ways of doing it or saying it politely. But because of that, we are bringing trouble, or we are inviting trouble for ourselves. And these are the basic reasons for the disciplinary cases. We go to the next slide. The next slide, please. Now, these actual cases which I have just now dealt with, there is another, about the disputes I was talking. This is 215 of the company of 56, but now, of course, there will be a corresponding section of this 2013 Act. But there is another interest about the disputes I was referring. See friends, Mr. A was a chartered accountant and B was his friend who was an engineer. A and B were doing manufacturing activity in a private limited company for many years, more than 25 years, and they were doing very prosperous business. B was an engineer and his son wanted to do his CA, articleship. Now Mr. A, who was actually was holding the COP just for the sake of sentiments, he was not very active into practice. But whatever he was doing, B's son did the articleship under him. He passed his CA and he also joined some corporate. Thereafter, between A and B, there was a dispute. See, friends, so long as there is a prosperity, everything is good. But once the adversity starts in the business, then there are disputes. So the disputes arose. There were cross complaints in CLB. That time CLB was there, in the high courts, in the criminal courts. Everywhere there were disputes, arbitration. And to add a fuel to that particular fire, the B's son, actually B's son who had done articleship under A, but B's son filed a complaint to the institute saying that this boss of mine, ex-boss or rather ex-principal, was engaged into business without obtaining permission of the institute because he was acting as an executive director. Now, you may be aware, I'll be dealing with those things, but I'm just creating a background as to what is in reality happening today. Then with reference to this, we will see the clauses. So here, A said he had no defense whatsoever because he was actively engaged into the business and he was acting as an executive director. Now, since he was actually doing as an executive director, he had no argument. But then the disciplinary panel reprimanded the boy saying that, of course, they have no choice, we will deal with the member whenever he says. But because he has said that he has no defense. But unfortunately, the attitude of that boy was not proper. So this was another case. I'll be sharing such cases from time to time to explain the principle. We'll go to the next slide. And in good faith, there is one more case. There was a proprietary chartered accountant and he had very close friends who were having partnership business. A partnership means firm, chartered accountants. Now they had a good collection of more than 5 crores in the year 2005. That means a fairly middle size or good firm, means having good clientele and good revenue. This chartered accountant, since all the 4 partners were very close friends of his because they had done articles together or they were classmates or for any reason, he simply put his signature on the tax audit of that firm because he knew that they were doing good practice, they were knowledgeable, so that whatever balance sheet and financial statement they had compiled, so he just put it blindly his signature on the tax audit. Unfortunately, in the assessment proceedings, it was revealed that when the books were seen, it was revealed that there was a cash negative balance of hardly 400 rupees on one particular day. What has happened for friends, because of the lack of proactiveness, there was no sufficient time, so they had not even bothered to see, because in the tally package or any accounting package, all these discrepancies are easily pointed out. They are popping up all these things, but unfortunately, there was nobody even visited that particular firm's office and he just put his signature. And unfortunately, now he has to face music because of the negligence, because the Income Tax Act said, Income Tax assessing officer said that your people are signing the balance sheets like this. So this is what the areas of introspection that we should have. Whatever work we are doing, and for this we need to train the articles. We need to train our staff members. We are complaining against the articles that they are all useless people. They are not doing the work properly. They are obsessed with their examinations and coaching classes, and they are not attending the work. All that may be true also partly. I'm not saying that it is not correct. But at the same time, we need to introspect as to how much time and attention we give to train them for doing the work. How much time we really spend for creating interest in their minds about the work. Because you cannot be alone expected to do all the paperwork. So the communication, everything has to be taught. Now GMCS to some extent tries to do it, but our small firms and medium-sized firms, they have to take it very seriously. Because whatever things which Kamalji pointed out, that obtaining signatures or the confirmation from all the staff members about their independence. Now, this is something unheard of in a small firm. For a big firm, yes, there may be a regular system, but unfortunately, there also I have seen that these systems are not always present. They may be having it in theory, but in practice, it is very difficult. But if we are aware, unfortunately, the awareness itself is lacking. The awareness is lacking, and therefore, you must be very much prepared that for the more challenges that are coming. The vulnerability is so much that people are taking us for granted. They say that, in fact, there was a remark in the checklist of a consulate office that please avoid bringing chartered accountant certificates as the same are often found unreliable. Now, you may be aware that students who are aspiring to go abroad, they have to furnish the asset certificate of their parents that they will be able to bear their cost. And unfortunately, our chartered accountants give this certificate in such a manner that without verification of anything, and actually people are all aware as to how the assets are built up in the books. And they just issue a certificate and they may not be even charging fees for that. But yet the thing which they get as a reward is that please avoid bringing chartered accountant certificates as the same are often found unreliable. Please go to the next slide. This is only suggested reading, which also needs to be updated now. Again, next one. Next one, please. Now I'll come to the legal aspect, the statutory aspect of the Code of Ethics. But for the Code of Ethics, in some earlier slide I had mentioned, but I'll just mention it here. The slide is not required. Code of Ethics is not something new. And the new revised Code of Ethics also does not replace the Code of Ethics which was already existing. It is only refinement. It is something which is a small, slight modification. But these principles of Code of Ethics were enshrined in our country thousands of years ago. In the Taittiriya Upanishad, it was mentioned that for a chartered accountant, for all the persons who have completed their training and studies, it says Satyam Vada. That Satyam Vada means speak the truth. Dharmam Chara, that means discharge your duties very religiously. And the last one is Swadhyayat Ma Pramadha, that means do not compromise on the continuous self-study. Now, these principles, and that is our CPE hours. But unfortunately, chartered accountants are perceived as the persons who manage everything. They will manage everything. That means our chartered accountants even manage their CPE hours. So this is the credibility, this is the reputation today enjoyed by our profession, which is very, very disturbing. And that is why the respectability is lost. There are many case laws, many decisions which I'll be dealing with, but just now coming to the statutory part of it. See friends, there are two schedules to the Act. Actually, Chartered Accountants Act was framed in the year 1949, and there were major amendments in the year 2006. And those amendments are very fundamental in nature because they have absolutely completely changed the disciplinary mechanism. So I will be dealing with the disciplinary mechanism also. But these do's and don'ts. Now, for example, in cooperative society, first do's and don'ts was that be proactive, that is the do's. But one important thing is that don't do anything in good faith. Similarly, a cooperative society's audit is one of the most dangerous things to do. Especially cooperative housing societies, friends, there are always some members who are so crooked and who are bent upon harassing the other members. They always have some issues with the managing committee, and they want to see, they harass the chartered accountants or the auditor, and the fees prescribed for the cooperative society is so meager that actually you can't afford to even face that disciplinary committee proceedings, because the fees could be even a few thousand rupees. Maybe earlier it was just few hundred rupees. The cooperative societies, there was the case which I would like to share, that there was a chartered accountant lady who had completed the cooperative housing society's audit, and there was a dispute between the members with the managing committee. So what the members complained was, and it was more than 3 or 4 years ago. The audit was for pertaining to a year which was 4 years ago. Now this members filed a complaint to the institute saying that 4 years ago, our society had sold some FSI, and according to us, the proceeds were taxable. And so what we will do is we will approach the income tax department, ask them to reopen the case under section 148, and we will pay the tax, interest, penalty, and recover this from the auditor. Now, why this was such a vengeance? The vengeance was to harass the auditor, to have an edge over the other rival members or disputing members of the committee. So to this extent, people go. And that is why I'm saying that you have to be extremely cautious, especially for cooperative societies, because there your earnings are very meager, but the trouble involved is too much, too high. In fact, there are at least more than 50 cases where small cooperative societies audit is involved. And there all these, in our chartered accountants themselves instigate the complainants to file a complaint against the society's auditor. That is an unfortunate part. So section 21 of the CAS Act, it starts dealing with the disciplinary mechanism. And section 22 defines the misconduct. And in section 22, it is said that misconduct means any of the items which are stated in schedules 1 or 2, any of the items, and there are 19 items, as you see in the screen, there are 19 items in the first schedule, and there are about 15 items on the second schedule. So there are about 34 items. And also it defines that any of the item in the schedules, stated in the schedule, and other misconduct. Now this other misconduct is a very, very wide topic. Other misconduct has within its ambit any case that brings disrepute to the profession. Now friends, here at again this point of time, again I have to deal with a High Court decision, and you may be aware of that decision. The question was whether a chartered accountant's conduct is to be examined only when he was acting as a chartered accountant in his capacity as a chartered accountant or in any capacity. Take for example, if a chartered accountant does misbehave with a female, for example, then whether it is necessary to see that whether he did it in his own office or in his client's office or some other chartered accountant's office or in a CA conference where his presence was essentially as a chartered accountant. Or whether one has to see beyond this, that means wherever he goes, suppose he is attending some private function or he is traveling on a holiday tour, even there, if such kind of behavior, whether even that also is within the ambit of these misconduct. And the High Court has ruled that yes, wherever he goes, the chartered accountant's behavior should be exemplary. And why? The logic is there. Unfortunately, if you always see the press or the news items, it says chartered accountant held for such and such thing, chartered accountant held for bribery, chartered accountant held for the frauds in the company. So if this is the situation, that means our profession is getting a bad name. So even if it, and there are, that is why I say even dowry cases also here. So suppose there are torture because of the dowry, then press will always report like this. And because of this, institute is also very right, saying that wherever and whatever capacity you are having, it should be in the exemplary manner. That means your behavior should be in an exemplary manner. So now Schedule 1 and Schedule 2. What is the difference between Schedule 1 and Schedule 2? Schedule 1 deals with the items I just complete this slide, and then fortunately now that slide and everything is now operational, so I'll replace that device. Now this Schedule 1 contains only those items which are within the profession. Within the profession in the sense an outsider is not adversely affected. Outsider is not adversely affected because, for example, communication with the previous auditor. Communication with the previous auditor, the outsider has nothing to do with it. Who is affected is another chartered accountant. Or another case, obtaining permission to do other business. Now, obtaining permission to do other business when you are in practice, outsider is not affected. But this profession, within the profession, or not obtaining permission or even soliciting the client, soliciting or advertising, because of this, the other professionals are affected, are co-profession. So this is within, and therefore the punishments which are prescribed for this are a little milder. the punishments are little lenient. So that also we will deal in some other slide. But at this stage, I must say that first schedule offenses or items are considered to be of lesser gravity. Second schedule items are those where outsider is affected. Outsider is aggrieved. Why is aggrieved? Because his interests are affected. Now take for example the most common case of gross negligence. Because of your gross negligence, you have signed some balance sheet on the basis of which the bank has given the loan and the loan had become an NPA. Or the revenue loss is there because of your wrong signing of tax audit report or balance sheet, where the outsider is affected. Or you are also divulging the secrets of the client. Or you are also signing the balance sheet or financial statements of a person with whom who is related to you. Now, all these aspects are falling in the second schedule. So because of that, am I visible now and audible? Hello? Am I visible and audible now?
Sir, you are both visible as well as audible, sir.
Good. So sorry for this inconvenience, but now I'll be able to operate so that
Not a
Santosh ji can be relieved.
Yeah, not a problem, sir. You can go ahead.
Yeah. Now in the second schedule, as we saw, that these are actually affecting the outsiders. But here also there is a caveat that whether means it is not a criterion of invoking the disciplinary mechanism. This is not a criterion. So I will be dealing with the principles of disciplinary mechanism that has so far.
Next slide. Sir, can I next slide, sir? Sir, next slide. Should I put, sir?
Now I am dealing with the principles of disciplinary mechanism.
Santosh, I think Chandrasekhar sir's screen is absolutely visible. Probably you can stop sharing and Chandrasekhar
The
sir,
first
you
principle
can.
is that the disciplinary case can commence. Disciplinary case can commence on the basis of a complaint or information. So the complaint is to be filed by the aggrieved party. But there is also a situation where it can be commenced on the basis of information. Now, what is the difference between complaint and information? Complaint is a regular procedure where there is a prescribed form, and from the prescribed form, and it has to be accompanied by a fee of 2,500 rupees. The complaint form is very simple, but the information case, what happens is, now I deal with this particular information, either who informs or who submits the information. Usually, the regulatory authorities are resorting to the information case, and I will deal with this just now. What is happening is sometimes the Companies Act means wherever their ROC comes across certain balance sheets or certain financial statements which are not properly signed or properly presented, but instead of filing a complaint, they just pass on the information. They may not be very much aggrieved because of that, and if since they are not aggrieved, they are just pointing out that there is a discrepancy and the auditor has not functioned properly. Because of that, they just pass it on as an information. For example, I'll give you a very concrete example. There was there was a company which was an executor and trustee company. You know, executor and trustee company means they deal with the wills, or rather they execute the wills of their clients after the clients are dead. So there was a will which was being executed by the executor and trustee company. That particular deceased person's daughter was interacting with the company, and she was feeling that the will which was being interpreted by this executor and trustee company was not done in a proper manner. She felt that she should receive much more property from her father's will, whereas these officers or the managers of this particular company interpreted it in a different way, and she received less than what she expected. So she wrote to the directors saying that they should instruct their managers to execute the will in a proper manner, which the directors did not act on it. They did not respond to her. Now, to teach lesson to the directors, what she did, she engaged some other chartered accountant and asked him to bring out the discrepancies in the financial statements of this company. The chartered accountants are always very, you can say, enthusiastic in such cases because they have their own self-interest. So he pointed out that all the financial statements are otherwise okay, but there are one or two accounting standards which he has not reported. For example, AS3 was not reported. Now, AS3 was not reported, which was not going to affect rather the true and fair view of the company. And in any case, that had nothing to do with her grievance. Her grievance was the will, the execution of the will of her father. Whereas now what she was doing was discrepancies in the financial statement. So she filed a complaint to the ROC saying that these two accounting standards, this chartered accountant has not observed, or there is no proper disclosure. Now, ROC, when he saw the complaint, he summoned the directors and the auditors also. The directors explained to him that this is the reason why that lady has filed a complaint. So this is just merely, the motive is to harass me. There is nothing further. So ROC also could realize that because it was a frivolous complaint in that sense. But ultimately, when the complaint was before him, what he had to do was, he said, okay, we'll compound the offense. So everybody paid 5,000 rupees and that was the end of the matter. But that was the end of the matter as far as directors were concerned. But ROC filed all the, or rather transferred all this file to the Institute of Chartered Accountants of India to look into the matter. Now, you might realize here, because of the Chartered Accountants lapse, nobody was really aggrieved as such. But the discrepancy was obviously there. Therefore, they passed on that information. It could be some other instance also, that like there is a charitable trust, which is an educational trust, and its total income is totally tax-free, which is so assessed in 143(3), which has been assessed, even in appeal, it is held that it is absolutely tax-free. So there is no issue on that. The revenue is not losing anything. But if in the course of that, if the income tax officer or the assessing officer notices that the financial statements were not properly signed or properly verified, then he passes on that thing as an information to the institute. I hope the point is clear. Now, information, once it is information, then what is the implication? The institute then, means the disciplinary committee or the disciplinary directorate, they write to the that informant as to whether he wants to file a complaint or he just wants to stop at the information stage. The difference is that when it is a complaint, the complainant is there in the proceedings throughout the completion of the proceedings. But when it is an information case merely, then the director informs the informant that you will not be a part of the proceedings now if you are merely stopping at information and you are not filing a complaint, and you will be only at the end informed about the results or the outcome of the proceeding. So this is the main difference between complaint and information case. Now in the suo motu also they can initiate, but for suo motu they have to first verify the facts, then only the director discipline commences those proceedings. So basically this is complaint and information. Second principle is that the complainant need not come with the clean hands. This is very important. Many people feel that whenever there is a complaint, they try to see that the complainant himself is a badmash admi. They try to argue that the complainant is not coming with the clean hands. Normal principle of jurisdiction or jurisprudence is that whenever you are seeking justice, you have to come before the forum with clean hands. You should not be a contributory, means you should not be contributing to the negligence or the crime that you are alleging. Here it is not so, because this is a quasi-criminal proceeding, and here the council is concerned with the conduct or the behavior of the chartered accountant, and therefore they say we don't have any jurisdiction over the outsiders. In the sense that whether that complainant is a bad person or not, we are not concerned. You show us that you have done the work properly. You don't try to tell us that even in the public domain, even in the newspaper, that person is in fact, I have handled at least 10 cases, friends, where the complainant was behind the bars. He was in the jail. Still, the council say that we are no way concerned with that. You show that you have done the work properly. This is extremely important principle, friends, that you cannot take shelter of the fact that other person is not behaving properly. So you have, institute says, and institute's perception or the view is very right, that those cases which I explained to you, that nobody was affected. But they say we are not concerned with whether anybody is aggrieved or not. You show us whether you have done the job properly. So the council is not concerned with the behavior of the complainant. Similarly, they say that council is not concerned with the behavior of the complainant. At the same time, they say that there are other forums where you can file a complaint against him, but we are not concerned with that. Now, this complaint, earlier there was no permission to withdraw the complaint. But now in the 2006 Act, they have introduced the system of withdrawing the complaint. So to some extent, subject to certain conditions, if the president is or the director discipline is satisfied that the complaint is properly withdrawn and that there are no very serious stakes involved. Suppose sometimes the complaint is filed out of just misunderstanding or it is a trivial complaint, then it can be withdrawn, but not as a matter of right. Remember that merely because the complainant withdraws the complaint, that does not mean that you are absolved. So the most important part is that the complaint, the substance, the disciplinary committee or the director discipline will look into this particular thing as to what is the content of the complaint, and accordingly they will allow it to be withdrawn. Then the next principle, that even if the locus standi, in the previous one there is a locus standi also, one more point. Locus standi of the complainant is also immaterial. This is another very important principle. That, for example, the complainant may not be in any way connected with that particular company or the audit which you have carried out. He may not be a shareholder, he may not be a director, he may not be a vendor, he may not be a service provider, creditor, debtor, regulator, banker, financer, no connection whatsoever. In fact, friends, it's an unfortunate part that there are professional blackmailers also in this particular disciplinary mechanism, in the sense that they just pick out some balance sheet or the financial statements, and whatever are their discrepancies, they just point out and file a complaint just to blackmail you. So this is another aspect which you have to keep in mind, and that is why your work should be absolutely foolproof, and you should be able to show that you have discharged your duty properly. The next principle is again very important, that about the time barring. See, we as in the tax practice, we are very much concerned with the time barring aspect, that whatever 3 years, 6 years, whatever is there in the income tax. Here there is a very loose type of time barring. It says that the director discipline may refuse to entertain a complaint if he is satisfied that the production of evidence is difficult or it is otherwise not possible to complete the proceedings. So here what is more important is that you should be able to show that because of, and that particular period is 7 years. Previously it was 10 years. Now I'll give you an example, that if it is self-evident, that means no other evidence is required, then it can be entertained after any number of years. I'll give you 2 or 3 good examples of this. There was a will which was prepared by a lady, and she died after about 10 to 12 years after she prepared the will. When the will was opened, it was seen that the chartered accountant had signed it as a witness, but that lady herself had not signed it at all. Now, this is very serious, friends, very serious. People will feel, usme kya hua? Actually, it is just a lapse. It's not a lapse. When you are signing it as a witness, it means you are saying something like an oath that that person has signed before me. So it is a false statement if you are signing as a witness and she has. Remember, when we sign audits, we are not signing as a witness. So that date can be different. That date can be anything later than the director's date, director's signature date. But here, because there we are not witnesses, but here we are witness. When we are a witness, then you must ensure that that person has signed. So this is very important principle about time barring. Another time barring thing I can tell you, very interesting case. There was a chartered accountant who was more into academics. There was a boy staying in his society, housing society, and that boy was working with some share broker. So he suggested to this chartered accountant as to say, he said, sir, why don't you take sub-brokership of our boss, means his share broker. Now this chartered accountant told him, Baba, I cannot take it because our ethics do not permit. He said, you take it in your wife's name. This is another very common situation. So they took it, he went there, he took him to the broker's office. There was a simple format of introduction. It was not even an application form for sub-brokership. It was just an introduction. Their name, address, email ID. In those days, email ID was not there. That fax number was there, and so many other things. That he just mentioned them, single one-page form. And at the foot, while signing, he signed as so-and-so and proprietor. Actually, he was holding a power of attorney from his wife. But he signed as just mentioned as proprietor. He did not mention for proprietor. Take it, rather listen to this very carefully, friends. He just missed out the word for proprietor. Now, afterwards, unfortunately, within 4 to 5 months after this particular, the sub-brokership was started. He did hardly any business. Means his wife's name was there. He did hardly any business, and in that process, the boy ran away with the daughter of that broker. Because of that, that broker got wild. And so whosoever had come through this boy, he tried to harass them. And what he did, that introduction form, he sent to the institute as an information, saying that this is self-evident. There is no other evidence required because he has signed it and mentioned as proprietor. Now then we had to argue. Then there was interrogation of the wife. There are so many things, and finally it was resolved. But at cooperative society's case also, when I was saying about this FSI, what was lacking on the part of that lady? First, her first reaction is that, how am I concerned with the tax liability? Because I am not the tax consultant, I am only the auditor. But then she was mistaken because she had certified the true and fair view of the financial state affair or financial balance sheet. And true and fair is, if such an important transaction having a bearing on the financial statement is missed out, because there could be a tax liability and there is a separate standard as to which other laws we should take into consideration while finalizing the audit. So it was very but obvious that if she has not considered, for example, GST or tax liability, remember that her working paper should contain a note on the tax liability on this FSI receipt. Why? Because if she was herself knowledgeable, she could write a note or the relevant case law. But otherwise, she should obtain an expert opinion about the tax liability. And then only, and for this, again, I am repeatedly saying that you have to start the work in time. If you start the work at the end, 11th hour, then all this is not possible. So please remember that in such cases, your working paper should speak for your diligence. And in this case, for example, I was on this time barring part. Now, if it is so obvious that your balance sheet is not tallying, or certain things which are required to be reported, like disclosures, statutory, which you have not made, then even after 7 years also it can be entertained, provided it is of serious nature. See, usually our institute also does not merely because of a technicality, they don't entertain the complaint. But if it is of serious nature, then naturally this also can be examined by them. Another important principle is that it is not necessary that the complainant should incur any losses because of your misconduct or because of your lapse. As I gave you many examples, one additional example I'm giving. One example which I gave was the charitable trust where there was no revenue loss. Take another example. If you have signed a balance sheet on the basis of which the bank has financed a particular client, and that client serviced the loan properly. He did everything, he paid interest, he paid everything, the loan was also closed. But if in that process, if you had some other friction with the bank person, and if the banker had noticed that your financial statements were not right, the client repaid the loan is a different story, but financial statements are not right and they are not affected. The bank is not aggrieved, bank is not suffering any loss, still he can file a complaint. What I'm trying to emphasize here is that your work should be complete and perfect in all respects in absolute terms. Whether anybody relied on it, whether anybody suffered because of that is immaterial. So here also same thing I'm saying, that because of your work should be perfect. That is the council's view. Why? Because the reputation of the profession is that way. Now, if there is a grievance of the person because of your wrong advice, he had to suffer because of interest, penalty, taxes. For example, take the case of Section 50C of the Income Tax Act or Section 56. You somehow overlooked it. It was possible when these sections were newly introduced, many chartered accountants did not even apply their mind about Section 50C, the stamp duty value and all. I've come across many such cases. Now, because of that, the poor fellow had to pay tax. Obviously, he would have been required to pay even if it was noticeable. But the interest and the penalty for concealment, all that he had to pay. Now, in this case, suppose for any reason you get that penalty deleted, because there are many things which you can do in the appellate proceeding and the penalty is deleted. Question is, whatever advice you have given, if it was wrong or it was incorrect, then your misconduct is there established. You cannot undo. For take another case. In this particular case, suppose even if the penalty is not deleted, but you go to the client and say, "Arey, because of me, you have to pay so much. So you take this. I am compensating you. So I am reimbursing you all your losses. On the top of it, I will also pay you some higher additional amount." Even that does not help you, because you cannot undo what has already been done. You have already committed a misconduct. Now you cannot undo. In fact, even if you do that, it is in a way you are admitting, you are accepting that you have done a wrong thing. So remember that even if you compensate the other person or the complainant for whatever error you have committed, even then you are not absolved, you are not exonerated because of this. And our council has jurisdiction only on individuals, not on the firm. But now they are introducing an amendment. That amendment has been finalized. A presidential assent also has come, but central government has yet to notify the date. Now, about the time barring, I told you, but this date, I mean, the penalties which they are increasing, that I will be dealing with. So now I will deal with the broad procedure of the disciplinary mechanism. See, there are 4 authorities under the Act. 4 authorities are: first is Director Discipline. Now, Director Discipline is a bureaucrat and there is a whole directorate under him. They are all qualified CAs or lawyers. So basically it is a disciplinary directorate. Now, disciplinary directorate, what is the role? Disciplinary directorate's role is first to they first receive the complaint. They receive the complaint and they just pass it on to the respondent. They pass it on to the respondent. The respondent is asked to furnish his statement, which is called written statement. The written statement means whatever explanation you have to offer. So remember, complaint has been received by the institute. The disciplinary director has the jurisdiction to process it first. He passes it on to the respondent. the respondent is required to give explanation within 21 days. But we chartered accountants are not proactive. So what we are doing, only at the 11th hour we wake up. So when 21 days time is there, people approach the consultant like me on 18th or 19th day. Fortunately, because in chartered accountants cannot do anything without extension of time. This is the bad reputation of the profession. So we have to seek extension of time. Now, extension of time, the authority can give you only maximum 30 days extended time. Now they are going to curb it or curtail it to 21 days only. So that in that amendment, there are many such things which there, but broadly, you have to give your submissions or explanation within 21 days with the extended time of 30 days. Once that explanation you give, but remember here, just to tell you that they are not very rigid about the timings. They are basically they were interested in seeing the substance and the merits. So even if 1 or 2 days here and there it is unlike income tax that your rights are lost, like your appeal is becoming invalid or something. Nothing of that sort here. Although this does not mean that you should take it lightly. You take the things seriously about the deadline. So once your response goes to them, they forward it to the complainant. In the complainant is asked to write a rejoinder on that. So rejoinder means whatever his reaction is there on your explanation. Now, once these 3 documents are there, so these 3 documents, what are those 3 documents? Complaint, written statement, and the rejoinder. Once these documents come to them, then they start processing it. Then they start scrutinizing. Till then, they don't do anything. But first thing which they do, perhaps procedurally I missed out, is that if the complaint is against a firm, partnership firm, then they first write to the firm asking as to who is the person answerable on this complaint. Why? Because they have a jurisdiction only on individual members, not on the firm. Whereas NFRA has a jurisdiction on the firm as well. But here council has jurisdiction only on individual members. Remember this. That is why they ask the firm as to who is person accountable on this. Now, for example, if the person who has signed the financial statements obviously he cannot back out. So he is there. But he may say that I have signed it, but I have depended on the work of my colleagues who are qualified chartered accountant. There is a standard saying that you can rely on the work done by another chartered accountant. So he might be having now, for example, in big firms, there is a hierarchy. There are managers, there are directors, there are assistants who are all qualified. So in that, and they actually in the audit program, it is specified as to which aspect is examined by whom. In small firms, these systems are not there, but there they can identify as to who, that each and every person is given a separate, for example, rubber stamp or seal as to wherever he examines it, he puts his stamp and his signature, so that they can identify as to which this was checked by whom. Unfortunately, in our smaller firms, we cannot afford to do all this, but these are the proper systems. So if that person is identified, that individual, then all the correspondence is with that individual. So this is simple. Now, once these 3 documents come, the complaint, written statement, and the rejoinder, then the disciplinary directorate starts examining and they form what is called as prima facie opinion. Whether this person is, the respondent is guilty or not, and under which clauses. It's a very detailed opinion. They consider all the aspects, what the complainant has stated, the responses, and the rejoinder. They examine it properly, and it's a very detailed and very well-worded opinion, prima facie opinion. Now, suppose they say that out of the 8 allegations, in 4, you are not prima facie guilty, in remaining 4, you are prima facie guilty. Then what happens? Then the next authority. So this is the first authority up to this formation of prima facie opinion. So this is the authority with the director discipline. Now, if it is the first schedule offense, then it goes to the board of discipline. So board of discipline means there are 3 members in that board of discipline, and in the board of discipline consists of now 3 members. Also there is an amendment. That amendment is, these are the authorities, disciplinary mechanism authorities. Just now director discipline I mentioned. the Board of Discipline also is earlier. Now this is also getting amended. That is why I am pausing here. Earlier, there were 2 members from the council and 1 government nominee. That was the constitution of Board of Discipline. Now it is the other way around. There will be 2 government nominees and 1 council member. And it will be headed by the presiding officer is a government nominee. Now, that means virtually, now here in the disciplinary mechanism, the government's intervention has increased to a great extent, which is sometimes causing concern for all of us. So first schedule offenses are considered by Board of Discipline, whereas the second schedule offenses are considered by the disciplinary committee, because loosely we call everything as disciplinary committee, but disciplinary committee consists of 5 members. Again, out of that, 3 are government nominees now. Again, the presiding officer is a government nominee. So now the powers of the council in respect of disciplinary mechanism are getting curtailed. Now all this is linked with the punishments also, which I will deal with. So this is the third authority. So Director Discipline, Board of Discipline and Disciplinary Committee. What is the relevance here just now? The prima facie opinion which is prepared by the Director Discipline is placed before the Board of Discipline or the Disciplinary Committee, as the case may be, depending on what kind of offense was there. But it could be a mixed one. Now, if it is a mixed one, it is before the disciplinary. Mixed in the sense first schedule and second schedule both. Then it is before the disciplinary committee. The disciplinary committee may agree or disagree or partly agree and partly disagree. In the sense, they will say that yes, you are right. In 4, he is not prima facie guilty. In the other 4, he is guilty. But it is only prima facie guilty, friends. Then they will say sometimes, no, I don't agree with that your 4 conclusion about the 4. In only 3 he is not prima facie guilty, but in 5 he is prima facie guilty. So, but even if you are found prima facie guilty, even on 1 count, 1 ground, then you have to face the hearing. So this is the power at that stage of the Board of Discipline and the Disciplinary Committee. So then you have to face the hearing. The hearing takes place. In the hearing, what happens is all the facts, it is a fact-finding committee, friends. It's not like a court, although they have the powers of civil court. But the examination there, cross-examination is there, everything is taking place. You have to produce the documentary evidences. You can be represented by a counsel. So all these facilities are there. And it is not a very frightening atmosphere because they are very much concerned with the facts. So we have to deal with the facts and we have to deal it in a very objective manner. So you have to deal with it in a very objective manner. Now in the hearing, they might arrive at a conclusion as to whether you are really guilty or not. Because you remember, first thing was a prima facie guilty. In the disciplinary committee, after the hearing, they may conclude that no, in 6 you are not guilty at all, but in 2 you are guilty. Take for example like this. Then what they do? Once you are held guilty, then they give you one more opportunity as to what punishment should be awarded. In that, you cannot be represented by anyone or by a counsel. You have to go alone. So the respondent has to go alone to explain to them as to what punishment according to him would be proper. So udhar aapko rona dhona padta, you have to cry, you have to request them ki this was a technical lapse, I will not do it again, all these things. And accordingly, they award a punishment to you. What are the punishments that we will see in the next slide? But that punishment is given by way of an order. So now see, there are 3 documents coming from the institute side. One is prima facie opinion, apart from the first notice. Prima facie opinion, then the final finding of the committee, that is called a report, disciplinary committee's report. And the third is order of punishment. Now that order is appealable within 90 days. To whom it is appealable? To the appellate authority. So appellate authority is also there. Appellate authority is again constituted by 5 members. It is presided over by a high court judge. It could be a sitting judge or a past judge. And there are 2 government nominees and 2 Central Council members. The Central Council members should be such who have completed the full 3 years term of office. So these are the principles and the procedures which we have dealt with. Now we will go to the punishments. Hearing before the Board of Discipline. Punishment. What are the punishments? In the first schedule offense, the punishments are of 3 types. One is reprimand. Reprimand is like a stricture or a warning. The second is a fine not exceeding 1 lakh. Now this is proposed to be increased to 2 lakhs or 5 lakhs also now, subject to the passing or subject to central government's notification. And the third is suspension of membership for a period not exceeding 3 months. That is also being extended to 6 months under the amendment. So these are the punishments for the first schedule offenses. But now they have added one more very dangerous thing. They say that if the same firm, another partner is found guilty within 5 years' time. So suppose you are one of the partners was guilty, you are held guilty today. And within 5 years, if another partner is also held guilty for some other offense, then they can punish the firm also. Now, this is again very serious thing which one has to keep in mind. So now actually they don't have the jurisdiction on the firm, that is certain, but they can award punishment to the firm. So the hearing will be only of the individual partner. But if the individual partner, if he is held guilty, maybe initially A partner was held guilty, second stage B partner was held guilty, then they can punish even the firm. In the second schedule, the punishment is again of 3 types. Second schedule, the punishment is of 3 types. What is that? Same thing. Reprimand, the fine which was earlier there up to rupees 5 lakhs, fine up to 5 lakhs, which is now perhaps increased to 10 lakhs. They have sought to increase it. And the suspension can be for any length of time. It can be even permanent. Now, for example, that chartered accountant who was involved in the bomb blast case of 1993, he was debarred permanently. So these are the punishments. Indirect punishments are more serious. Indirect punishments are once you are held guilty, then for a certain number of years, you are deprived of any government audits. CNG audit means you cannot be empaneled. Or RBI, as a policy, the banking industry has decided that if you are having any partner who was held guilty, then you are disqualified from getting appointed as auditor. Similarly, even in the corporate sector now, private sector, under section 139 of the Companies Act, now you have to give a declaration whether any of the partner is undergoing, or partner or any member of the firm is undergoing any disciplinary proceedings. Now, when you say that disciplinary proceedings are in progress, once you are held prima facie guilty, then you have to say that yes, now there are proceedings. Till that time, it is only preliminary inquiry that is going on. But once you are held prima facie guilty, then you have to say that yes, now the proceedings are on, because now the hearing and all will take place. Suppose in prima facie opinion, they feel that you are not guilty, then they just send you simple letter saying that you are not prima facie guilty and the matter is closed. So then don't share with you the prima facie opinion. So this is the procedure as far as the disciplinary mechanism is concerned. But indirect, we are on indirect punishment. Indirect punishment, another severe punishment is that there is a stigma attached to this. That means your mind is pinching. I was held guilty. So you don't share this with the colleagues. You don't share it with even sometimes your family members, because you start feeling guilty. And secondly, once that suspension period is, suspension could be from 1 week, 2 months, 3 months, or 5 years, whatever. Suppose you have done a lot of fraudulent things, then it should be for 5 years also. After the period is over, you can reapply and get the membership restored. Now, once the membership is restored, it is treated that this is number means that your seniority is totally 0. So you are back to square 1. That means you have started practice on that day. That means your seniority is lost. You cannot train articles and you cannot be empaneled for a number of years. So these are indirect punishments. And imagine that if you are not eligible for getting appointed as auditor, then you are losing a lot of revenue. So the punishment may be 25,000, for example, fine. But the fact that you are held guilty, it can deprive you of the fees to the extent of 25 lakhs also sometimes. So you can't say. That is why you have to be extremely cautious about this disciplinary mechanism. Now, I'll deal with some other aspects of this as to practical instances of working paper. Then I'll deal with some of the important items of the schedules also. Who complains, friends? Anybody can complain. Your own staff, your family member, your brother, client, the regulator, any person can complain under the sun. So even the spouse can complain. So this is the first part. Even articles have complained, as I told you that case where your ex-article complained. So this is, I'll also be dealing with one principle as to what happens in the law, other law, is not necessarily having a bearing on the ethics. Means what is the difference, demarcating line between the law and the ethics? That I will be dealing at the end. But working papers. Now, the most important principle in any audit that you have to keep in mind is the professional skepticism. And now I'll share with you two experiences which are very, very speaking. There are large corporates, turnover of 5,000 crore rupees. Their stock values are say 500 crore rupees, 600 crore rupees stocks. They want to have their stocks certified by chartered accountants. So what they do, they catch hold of some small time chartered accountant and they pressurize him and they say that you have to give us the stock certificate within 3-4 days time. This chartered accountant, small chartered accountant feels, अरे मेरे को 30,000 rupees fees मिल रहा है 2 दिन में. So they just blindly sign it. And what he thinks, अरे इतना बड़ा corporate है, very professionally managed company, it is reputed. So unka stocks should be proper. Unke auditors are also very senior persons, big 4 are auditors. So he certifies that stock. But unfortunately, there is no working paper whatsoever that he maintains. No working paper. That means there is no visit report, how many staff members visited it, where there were any queries, where there were any correspondence. All these are working papers. I also shared that my slides on the working papers, which can be circulated also, because time constraint is there. That is why I am not able to deal with the working paper management. But on working papers, I will share with you some important cases. So these working papers are not, and then the first point of professional skepticism is that why such a large corporate is approaching me? Why they can't get their certificates from so many chartered accountants which are there in their circle? And I'm a small person. I just started my practice 2-3 years ago, and I'm at some remote place in the suburbs. And why corporate which is having a head office at Ahmedabad is approaching me for the stock certificate? This is the first thing as a professional skeptic. See, I am also appointed to, I am a part of the board of directors of a small cooperative bank. Now, if some borrower comes, first and foremost thing which we ask ourselves as to why he is coming to us if he is such a big person. If he says that his balance sheet is effective, impressive, his turnover is very high, then why is he approaching us, a small banker? He can always approach a big bank and get the loan. But then that is skepticism. So skepticism in that first case which I told you about the certificate of attestation copies of the ITRs of husband, the chartered accountant should have thought, that ye lady had never come to my office earlier. Why today she is coming without any intimation, without any message from her father or husband? Why has she come like this? He asked her what is the purpose of the certificate, and she is told usually it is required for visa, it is required for bank loan. That all that she told. He took it in writing also. Question is why there was no confirmation from this. And now I am sharing with you a case of working papers and professional skepticism. Remember, friends, whenever a company wants to show better performance for loans or for getting IPOs, they suddenly start showing better performance. The turnover is multiplying, the profits are multiplying, and everything is foolproof. These are circular transactions. So in the group company, each one sells to other, and the GST and the circle, everything is complete. Paper-wise, everything is proper. You cannot find flaw in the paperwork. But whether so much stocks have already moved, suppose they have inflated the sales, whether the stocks were correspondingly there. Secondly, how suddenly this company has started making so prosperous this thing performance. All these questions should occur to your mind. If you are not thinking on those, this is professional skepticism. See, what is skepticism? It doesn't say that you should suspect everything, but you have to trust but verify. That trusting but verification is important. Now, when it says that gross negligence, the courts have held that gross negligence means a simple error is not a misconduct. Even a blunder is not a misconduct. Even a small negligence is not a misconduct. But gross negligence means what? There should be an element of dishonesty or ill motive. Now, if you say that there should be an element of ill motive, and if you say that some friend of yours who is a good person, nice person, you know that he is an honest person, but unfortunately he doesn't know anything about accounts. So he just produces before you his financial statements and says that you certify because then I will get loans and everything. You also are not dishonest person. You don't have the intention of deceiving anybody. Your ill motive is not there. But you just to help that friend, you just put your signature without verifying. Now you are not understanding the gravity of it. The clause 2 of part 1 of second schedule says that signing such thing, anything without verification is a misconduct, because you are sending a message to the outside world that you have verified it. When they see your signature, unfortunate parties as chartered accountants do not attach much importance to their own signatures. That is why the world does not respect that signature. They take it for granted. So if you say that, no, I cannot sign this like this, then only the respectability of the profession will increase. But here, people are taking us for granted. Now, what has happened here is that professionals came. In the Satyam case, what happened? In Satyam case also, it was argued that such a large corporate who had won the Good Governance Award, Golden Peacock Award, International Award for Governance, and they are showing in the balance sheet, they are showing the FDR also to us. And if such a reputed person is there, then can we not trust that? That was the question asked. And the reply from the finance minister was that if an FDR of 10,000 crore rupees, if you cannot trust the audited accounts, then why is audit required at all? If you are doing everything in good faith, वो अच्छा आदमी है, he is good friend of mine, वो किसी को फंसाएगा नहीं. If this is the argument, then what is this? There is no required of audit profession. Anybody can sign in good faith. So remember, friends, our signature commands a value. And unless we attach the value to our own signature, people are taking advantage of it. So I have told you that there could be many such complainants. I was telling with the working paper management. Another vulnerability is that, see, firstly, peer review also is basically a preventive step. If your thinking systems are good, then you are unlikely to create or commit any misconduct. But even peer review, people try to manage, but don't do that. It is for your own benefit. So peer review, but then people are now directly approaching the police. Now there was a case which was like a nightmare, because all these cases which I am sharing, they are all eye openers. One lady, when the chartered accountants had just gone out of the cabin, his mobile was lying there, and that lady had some friction with that chartered accountant. So just to teach a lesson to that chartered accountant, she sent very bad, dirty and obscene messages to herself from his mobile. And she went to the police that the chartered accountant is sending me this kind of messages. And that person was arrested. The CA was arrested and he was behind bars for 5 days. And then he got the bail. And then she also took the photo of that screen and also sent to the institute, bringing disrepute to the profession. Remember that you have to be extremely cautious in your behavior. Extremely cautious. Don't trust anything and anywhere. The people are there to take advantage of your vulnerability and your rather lack of seriousness in the matters. In the press also, people immediately approach the press they go to the public media also, means public domain also, and they also can go to the consumer forum. For example, in that wrong advice, people are under a wrong impression that these ethics are applicable only to the audit function. No, friends, it is not so. Even in advisory function also, it is very much applicable. So if it is there everywhere, now I'll share with you that story. There was a corporate which was engaged in, they are having some mines. The mines were somewhere in the northeast part, in Assam, Odisha or somewhere. They had a corporate office in Mumbai. Now 50 to 60 staff was there in Mumbai. The turnover was more than 600 crore rupees. So and there was a bank loan, PSU bank loan was there, a term loan for machinery. These people, that company became an NPA. Remember, as soon as you become an NPA, the nationalized and large banks immediately file the complaint against the auditor. In reality, there could be some lapse on the part of the bank itself. There could be some collusion also between the management and the then branch manager over there. There should be anything. But once the NPA mark is there, then to protect their own management, their own staff, nationalized banks immediately file a complaint against the chartered. Chartered accountant is the soft target. He can be made a scapegoat anytime. So this is the complaint that they received. They had maintained excellent working papers. It was a learning for me also. So that working papers were there, we sent the working papers. Each and everything was properly maintained. We sent the working papers. Thereafter, about 18 months time, actually I did not deal with the time frame of these disciplinary cases because that paucity for our own time. So they came to me again after about 18 months time, and they showed that there was only 2 queries which they have sent. I missed out on procedural part on one aspect, that when the prima facie opinion is getting formed, Director Discipline is actually examining all the documents. If he feels that there should be some other extra additional information required, he can take from both the parties, like a normal proceeding. So complaint, written statement and rejoinder is there before the disciplinary directorate. While examining, if they find that some other information is required. Now, normally what is required is sometimes certain documents are in a regional language, like say Marathi or Telugu or whatever. Then they ask you the English translation of those documents, or sometimes some cases are based on some local laws, like say Maharashtra Public Trust Act is there, Maharashtra Cooperative Societies Act is there. In that sense, then they ask the provisions of the local acts, because there at Delhi, they may not be having that act. So these are the usual things, or they might ask you, send your working papers, anything. Now there were only 2 points which the Director Discipline had written. One was whether you had confirmed with the bankers independently about the bank transactions or the bank balances. They said we had not checked directly or independently from the banker, but we have the photocopies of all the bank statements with us. I said, very good. Now here also I will be pointing out to you the difference between gross negligence and lack of due diligence, because earlier there was only gross negligence as a misconduct, but now they have added gross negligence and lack of due diligence. Now what is the difference? So this was, bank statements were there, means bank statement, Xerox copies of bank statements were there. And about the debtors, they said, no, we had not written to the debtors and creditors. Now, for example, with small firms like us, they never take any third-party evidence, third-party confirmation about from the bill. See, some of our clients may be dealing only with one large corporate. Their only client is that large corporate, but they are afraid to ask confirmation from them. And we also never say. So our confirmation year after year in our Karo and Mao Karo report, we say that all the balances are subject to confirmation, which is wrong, because we have never even tried to get the confirmation. And see, this is lack of due diligence, because as I told you, when the performance is suddenly increasing, that time also, if you seek the third-party confirmation, then all these frauds are exposed. Here also, it was so revealed that they told us that this was a CBI case, and what was revealed was all the documents were fake. Even the bank statements were bogus. So you just can't imagine as to what, that is why third party evidence is required. Recently, in a charitable trust formed by the leading charitable hospitals in Mumbai, a fraud was detected, fraud was actually exposed. Actually, there were two boys in that trust, the hospital trust. One was the son of one sub-staff, or you can say class 4 employee, a peon there. That boy was very bright. He passed his BCom and he had a friend. So these auditors who were doing the audit, internal audit and statutory audit, another firm, they felt that yeah, we should train them up. And so they trained both these boys. And these boys were employed in that trust. And 20 years we are doing the internal audit and statutory audit, for example. Last 10 years, these boys started committing fraudulent deals, which we never imagined. We have so much trained them and they are so nice and they were all trusted. Last 10 years, they have siphoned off about 6 crores of rupees. And what was there? They floated bogus firms and put expenses in their names. And unfortunate part was that the sixer which they hit was that two of those firms, see, for example, they formed their relatives and family members, some partnership firms. Two of their firms' income tax return also they got uploaded through this internal auditor firm. Now, these internal auditor, poor fellows, they were really honest. They were very simple, but good faith. So good faith is the cause of many problems. So there, they did not even see what was, in fact, at assistance level only, because those two guys were otherwise well versed with preparing a balance sheet and everything. So these chartered accountants had never applied their mind as to what content is there. They had themselves prepared the income tax return, only uploading service. They got it from this chartered accountant's office. Remember, even the KYC norms are now made mandatory. For example, if that lady was in reality the wife of a very notorious gangster who had been killed in the police encounter. That lady who took the send of dirty messages, that lady was of that background. Now KYC details are also made mandatory for us. In fact, chartered accountants are also, there is a notification saying that chartered accountants should maintain their own accounts regularly and properly. And you introspect how many chartered accountants are maintaining their own accounts properly. We only try to curse and blame the clients. A client useless, they don't have any accountant, everything needs to be done by us only. This is our usual complaint. But are we ourselves serious about what our own maintenance of accounts and all? So all this you have to keep in mind. I'll come to, because now there's very short time left, but I'll just deal with even previous auditors' communication, friends. This is the thing which is taken very lightly, and many complaints are arising because of that particular count. Remember, there are clause 8 and clause 9 of part 1 of the first schedule. This particular thing which of that 600 crore turnover, what is important is third party evidence which is standard on auditing. And if you resort to it in time, then probably many things would have been detected much earlier. I asked them, did you never visit that particular place? They said they took us once and they showed us the mines, but we don't understand what is the mine, how does it look and what to see. Same thing happens. So skepticism means you have to carry some expert with you who can understand that, and then he certifies. So the previous auditor communication is also often taken very lightly. Remember that previous auditor's communication, it should be firstly in writing, and it should be made before accepting the audit. What happens is, we accept the audit, we start working on it, and when the time of signing arises, that time we wake up and then we run around and try to get that NOC so-called. There is no mention of NOC in the act. There is no mention of NOC of the previous auditor in the Code of Ethics. But previous auditor means what? It doesn't mention previous auditor. It says the member who held the position of an auditor in the past, last. For example, last 3 years, there would not be any tax audit in some particular case. 4 years ago, there was a tax audit. In between, either there was low turnover or 44 AD was there or whatever. There was no tax audit. Now, if I'm appointed as the tax auditor, then I have to write the person who was there for 4 years ago. Many people say, how do you know who was there? It is your duty to ask. It is your duty to ask as to who was the previous auditor. So people take that, client should tell them everything. It is your duty to decide as to what to ask and what information you want. Many people say this society does not maintain anything, they are not cooperating. Then you leave that audit. But having accepted the audit, you have to do full justice. And so it is because see in our audit report, what we write, we have obtained the information and explanation which to the best of our knowledge was necessary. So what was necessary, you have to decide, not the client. The client may not tell you. Many assistants tell me, he never told us, it is not his duty to tell, you have to ask. And that asking should be in writing because that is the documentation. So your queries should be in writing. Now, previous auditor communication, they have permitted to send it on email. But which email ID? The email ID which is registered on the institute's portal. And remember, you cannot delegate this to others. So you alone, you have to yourself write to the previous auditor. But there is another thing attached to this. If there is any undisputed audit fee unpaid, then you cannot accept the audit. Even if he gives NOC, because acceptance of audit when the undisputed audit fees are pending in itself is a misconduct. So there is no question of fee allowing you to accept the audit. Remember, there is a direct guideline of the institute. So, but what is undisputed audit fee? And remember, it is only audit fee, not other professional fee. What is the indicator of undisputed audit fee? Undisputed audit fee means the audit fees which are appearing in the balance sheet as outstanding if the balance sheet is signed by the auditee, that means the directors. Now people will ask, what happens to the cash method of accounting? See, cash method of accounting also is, you are a chartered accountant, you have every ways and means to verify whether the fee was paid by cash or whatever. When was it paid? What is the evidence of payment? Another thing, the client will tell you that yes, he has paid, and he will show you that, see, this has been paid by check. But remember that in the balance sheet, there could be for audit and for other services. Now, when you pay by check, the previous auditor, he is smart enough. What he says, his fees which you are paid actually pertain to the professional fees. My audit fee is still outstanding. See, these are the things which are the risks which are involved. So previous auditor communication is absolutely important. And then clause 9, this is clause 8. But clause 9 is more important. And I see many people are rather committing a misconduct on this. I have seen many chartered accountants who are just starting the work by simple letter from a director or a board of directors, and they start the audit. Clause 9 says that your own appointment, you should verify properly whether it has been made properly in the AGM or EGM, whether the meeting was properly held, whether the notices were sent, whether there is an attendance record, whether whatever forms were to be uploaded to the ROC site, whether they have been done. Now, this secretarial record, we are totally ignorant. We don't even ask for the records. Be it a trust audit, be it a society's audit, we never see the minutes. And even if we see the minutes, just minutes are not sufficient. Whether that meeting was properly held or not is also important. That we never see. So remember that these are the things which are coming. Before I conclude, one or two small points on this executive director. See, what is permitted is that you can be a director simpliciter. But I have come across many chartered accountants who have floated the private limited companies only with two persons, they themselves and their spouse. And executive director, you cannot act as an executive. You cannot sign checks. You cannot even sign the financial statements. But many people are doing the work under and many chartered accountants are obsessed with the idea of HUF. They say, I am not doing, but I'm in my HUF capacity, I am there. They say, people remember, there is no such thing as HUF capacity as far as the doing other work is concerned. Because HUF per se acts only through you. Unless you show that in HUF there is other person who is competent and who is taking care of that, but still you have to obtain permission. Remember all these things, because HUF is not a shelter for you. And professional work cannot be done in HUF's name, because profession is essentially that individualistic, the person. personal services are there, so it cannot be done in HUF. So this is another thing. Share market dealings. People are engaged in the share market. Now institute has permitted it, provided they say that you do it only for yourself, not for others. So you cannot give a portfolio management service to others. So these are small things which are coming up. Actually, the time required for dealing with all the schedules, 34 items are there. So even if I have to take 10 or 12 important items. So clause 9, friends, nowadays, today in a very large corporate, an NBFC, the issue has arisen as to the proper appointment of the branch auditors. Because the unfortunate part in that NBFC's case is that there are many branch auditors because there are many branches, but audit appointment was made, communicated to them by the company, but there was no resolution in the AGM. So under the Companies Act, and even there has to be a resolution in the AGM for appointment if you are appointing a statutory auditor. They had appointed a statutory auditor, and in consultation with the statutory auditor, they appointed the branch auditors. But the branch auditors were not actually appointed in the AGM. And there were proper appointment letter and everything was there, but fees were paid by the company. But the report was addressed to the statutory auditor. So these are small, many technicalities we commit as errors. But now I will deal with you, rather share with you a case which can bring out the distinction between the legalistic view and the ethics. Because merely because you have complied with all laws does not mean that you are ethical. Secondly, also remember that you are either ethical or unethical. There is no in-between stage. You cannot say I'm ethical, I'm partly ethical. No, then you are unethical. So there are many such things, and people say, why this burden on us only? People can behave any way they like, and doctors are behaving, architects are also not behaving properly, lawyers are not. Why only chartered accountants? Because our profession, the foundation is our credibility. So that credibility can be ensured only if you are that procedure burden is there. For example, for a doctor, if he gives you prescription or prescribes the medicine or whatever, without getting the proper reports, pathological reports, and suppose even the treatment works also and you are cured, still under the medical, that protocols have to be followed. That means without resorting to this, why doctors also make us do all these tests. Sometimes we feel irritated कि doctor अपने को सब घुमा रहा है. But why? Because you have to follow that procedure. Only then you have to arrive at a conclusion. If you are doing it, jumping to the conclusion without applying these things, perhaps even if you are giving proper medicine, there could be a misconduct. The other way around is also possible, that you have done all the tests properly, but diagnosis is wrong because there is a human error of judgment. So then, but you are not negligent, remember. So these are the things, but now I come to the last part. Actually, there are many things which I have to share, but unfortunately the time constraint is there. The last part. One chartered accountant had a cousin. Their whole family was engaged into we were connected with the film line. The chartered accountant was practicing. His cousin was there, that cousin was not a good person. He was a vagabond. But this family was taking care of him because that cousin had lost his father in early age. And it was a joint family. So this cousin comes to this chartered accountant saying that now I have to produce a film. And the budget is such and such, say 5 crores. You give me a check of 50 lakhs just now. I will show it to the financiers and raise the 90% part of it. The chartered accountant in good faith to help the cousin, he gave the check. He gave the check. The validity of the check was in those days 6 months, for example. Nobody entertained this person and they did not give him a single penny. So this after 6 months before the expiry was over, actually that cousin was not a good person. He deposited the check, but it bounced and filed a complaint under section 138 of the negotiable instruments against his own cousin who was a chartered accountant who had helped him. And he managed the proceedings, and the chartered accountant was convicted because the check was bounced and he was not in a position to pay 50 lakhs and he would not pay. So it was bounced and he was convicted, and the matter went as an information to the institute. Because whenever there is a press report like this, it goes to the institute. Now the institute, perhaps, he filed an appeal to the High Court. In the High Court, perhaps he will succeed, because if he shows the circumstances and all, perhaps he will succeed. Remember that the illustration which I gave you of the wrong advice on section 50C, there is a penalty. And you get the penalty deleted by many things, like there could be a Kar Vivad Samadhan scheme, or there could be some technicality that the notice of penalty was not validly issued, on such thing, or you could manage something, or the CIT appeal was very much a very generous person, kind-hearted person, and he deleted the penalty. Merely because penalty is deleted does not mean that you have performed the duty properly. If it is proved that your advice was wrong, your guilt remains. So what happens in the law, legal proceedings, does not have necessarily the decisive bearing on your ethical thing. And there are two unethical things in this process. Because otherwise you will say, "Arey bechare ne usko, he gave him in a good faith to help the cousin, so what wrong he committed?" See, firstly, you issued the check when there was no balance. That itself is unethical. Secondly, you have given a check with full knowledge that the check was not going to be presented. And some other person would have been misled by your check. Suppose some other persons had given the finance, then what they will complain? Ki his cousin also had given. On the basis of that, we gave our money. And that cousin is a chartered accountant. So that means you are misleading the people who see the check issued by you. This is unethical. So this is the thin line between legality and ethics. So friends, I must again thank Mr. Deepak Ladda and his whole team and Ravi Shankar and all the team members of the branch for giving me this opportunity. I'm sorry that in between there was a little inconvenience because of the technology, and also I could not complete the full content because the scope is very vast. So time permitting, sometimes I can deal with many more cases, but for the time being, I thank all of you for your patient hearing and giving me this opportunity to share my experience with you. Thank you very much, and Jai Hind.
Thank you, Vijay sir. It was exceptionally very comprehensive lecture on practical aspects. You have very, I'm not getting the right word, you have in detail, in a very simple language, in a lucid presentation, have told you based on your vast experience and what are the practical scenario which you have put forward before the members. You have definitely enlightened all of us, sir. Hyderabad branch is really blessed to have you virtually, sir. And mostly sometimes down the line, maybe in January, we can plan physical seminar also in a new session. Thank you so much, Vijay sir.
Are there any queries?
Members, any queries if you want to ask, because all members are the content was so good that already the wishes from all the members have flowing in, that being code of ethics, being even a dry topic, I should not say, but being not very much interested and like GST and income tax, so much nice presentation you have given that you have hold the audience to sit in front of the system and make them aware of such a important aspect of our CA Act and Code of Ethics. Members, before signing off, thank you, sir. Thank you.
I wish them good luck that they should not ever come into the clutches of the disciplinary mechanism.
True. Very true, sir. Very true. Members, any queries, you can just raise hand. We will enable. One member have raised hand. Santosh, I'm not able to see the attendance list. Can you just make it enable, or you can allow the speaker to want? Otherwise, you can raise the questions, request audience to type their question answers in the chat box or in a Q&A part. Appal Chari sir, I am making them enable to. Sir, you can talk, sir. Chari sir, if you want to talk, ask any questions, you have been enabled to talk. So I think by mistake, sir would have raised the hand. No worries.
Yeah.
Thank you, sir.
Anyway, even if they write to me again on email also, that to the best of my knowledge, I try to answer. Sure. And I think, and thank you for the feedback also. I like to have it more and more feedback also. on this. Thank you very much.
Sir, before signing off, request office to present a virtual memento. Thank you, sir. Kindly on behalf of Hyderabad branch of managing committee members, please accept a humble token of
Yes, thank
gratitude.
you very much. Thanks a lot.
I
It's
think
an honor to me.
Thank you. I think it's the first time in the recent past we are addressing Hyderabad branch, sir. I think
Yeah,
after
during COVID.